Go live stream. Yeah, so if you guys follow us on our YouTube channel, I'm trying to do more of this where whenever we have like our free sessions, like our workshops and things like that, we put them up on YouTube. So if you guys are not following us yet on YouTube, make sure you do that. Basically, here is the link. Right. So for any of you guys that are not following us, make sure you do because we post up a bunch of free content, including stuff like this, live sessions. Okay, so all you gotta do, click there, hit the subscribe button, and then maybe hit the notifications to all, and that way you'll get notified whenever we put out stuff. Okay,
Understood.
awesome. We got a couple people that just joined. Very cool. All right, so I was just for the people that just joined, make sure you follow us on YouTube. We're live streaming this to YouTube as well. I shared the link in the chat just one more time there. So make sure you follow us on YouTube so that you guys can get that free stuff. Cool. All right, okay. So let's get started here. So as I said, normally we do these classes only for Pro and All Access Plan members, but once a month we open this up to everybody. So welcome to those of you that are new here. Basically, this is what we do during these classes is we build algorithms live every week, right? It's called live algo building sessions. And basically that's what we do. We build algorithms live, right? So quick little disclaimer before we get started. This is for educational purposes only. We're not giving you any investment advice, can't guarantee any future returns. Make sure you take personal responsibility for anything you do with this stuff and verify everything independently, right? So we are not trying to give you investment advice here, but we are doing a lot of research. So feel free to take this and use it in your own things, but don't look at this and say, oh yeah, this is 100% guaranteed we should be doing this stuff. So little disclaimer there for everyone. Okay, so this is how these sessions typically work. So again, this is an open house session. We do this once a month for free to everyone to kind of so you guys can see what we do typically. But these are normally available for people on the Pro plan or All Access plan. And usually what we do is we'll start off with people presenting trading ideas, right? So you guys will have a chance to do that. Anyone here, feel free to do that. Present your trading idea, whatever you think we should work on today. I will present a little bit of what I worked on over the past little bit, and other people get a chance to present as well. And then once we've had everyone presenting their ideas for what to build, what trading ideas they have, then we're going to take a vote as to what we're going to work on today. I'll send out a vote. And then we're going to actually build the algorithm itself or improve on one that we already have. Then we're going to tweak it, and we'll usually try different parameters. We'll see what if we did this, what if we did that, and then you guys will have the chance to get and run the code. All right. So again, step one, trading idea presentation. Step two, vote. Step three, we're actually going to build the algorithm. Step four, we're going to tweak it. And then step five, we're going to get and run the code. Okay. And really quickly before we start into that, actually we changed our prices now. These are now $3.99 a month plus I think $9.99 up front. Setup, right? And this I think is that plus yeah. So for those of you that signed up, you guys got a really good deal because we added we upped our prices quite a bit. But okay, so cool. So if you guys want to join these sessions, you could join through either a Pro plan or our All Access plan. Our Pro plan is basically everything that you get in the starter plan. If you guys are on that, you get a bunch of stuff like workshops and things like that. So you get everything from that. You also get access to live algo building sessions. So exactly what we're doing today. You could join us every week if you want to do that, including the code, right? So for those of you that are here that are not part of our Pro plan or All Access, you will not be able to get the code unless you sign up to one of these. So if you actually want to run this algorithm, use the code, run it, that sort of thing, you need to sign up to the Pro plan. You also get access to our strategy library, the Pro version of it. Right, so here's all the strategies in our strategy library. We have a lot in here. I actually just added in a new one, our crypto grid bot. That's a new one for those of you that pay attention to this stuff. We have a bunch of good algorithms in here. We're probably going to talk about this one at some point today, our Condor Martingale, but Whenever you jump into any of these algorithms, you can click into them and then go to the bottom and see what the back test looks like. Is this something that you'd be interested in running? And then also kind of explains to you what parameters were used and all that kind of stuff, which we'll talk about later today. All right. But basically, you'll be able to go through each of these things here. Here's another one, butterfly condor. This one we haven't worked on for a little while, but got some really good results. Last time we did, it was 460% a year returns, which is pretty impressive historically speaking. Um, that's something that we can potentially go back into, but just to give you an idea of like the different types of algorithms that are available in these plans. All right. So that's the strategy library. You'll get access to all those strategies there. They're very easy to run, by the way. You click a button like this, and then that's basically it. Right? You have a strategy up and running. Right? So super simple to do that. Okay. So it's not like a complicated thing to run all these algorithms. All right, so that's our strategy sessions, our strategy library. We also have a lot of workshops. For example, we did a workshop last week to help people get their algorithms set up. We do a bunch of workshops like that to help get different algorithms set up. I think in the future we'll have workshops on different topics as well, maybe AI workshops and things like that. You also get access to our trading signals. So here are our trading signals. For example, you could watch our algorithms trade. Here's one of my algorithms that's running on my live money account. This is actually pretty nice because I've made almost $1,000 in the past 2 weeks, I guess. Yeah, a little over 2 weeks. I'm up almost $1,000 on this account. This one started at where did it start? At 6,000, something like that. Yeah, started at 61.84. We're now up to 69.44. This is live money. This is what's been happening in my account. If you want to follow it, for example, you get notifications here of every time it trades. So you can follow and see what this thing is doing every single day. All right. And there's a bunch of other ones in here. So let's say you can follow our diversified leverage strategy. Our rolling call strategy has been doing quite well lately. It's been taking off. This one, I think, is up since February 33%. I'd say that's pretty damn nice. Right, and there's a bunch of other ones in here as well. Crypto B bands, right? You could follow a bunch of our algorithms and see how they're doing. All right. You also get access to our Discord community, which is basically this here. We talk a lot in here. It's very active. So if you're interested in learning more about our algorithms, or if you need help with anything, or if you're a coder and you want help with coding some stuff or whatever, our Discord community is very, very active, and we could help you out with anything you need there. You also get access to our Python for Finance course and our Algo trading course when you're part of the pro plan. So you can actually learn a lot about the stuff. And we're actually currently revamping the Algo trading course. I started recording a bunch of it. So that course is getting a nice revamp very soon. All right. So that's our pro plan. If you want our all access plan, this is the fancy one. If you guys want basically all the features and more, you get everything in the pro plan. For this one, you get all of our course recordings, any courses that we've ever had in the past, pretty much, you get access to them. You also get 2 one-on-one hours per month. So some people, for example, they'll want we'll get on a call once a week or once every 2 weeks, and they're basically like, oh, I'm working on this algorithm, and we help them out and that sort of thing. So if you want like a lot of support, a lot of help, the all access plan is the best thing for you. We also offer full service. So if you want us to like install things for you, monitor things for you, we can do all that with the all access plan. All right. Cool. Any questions around anything that I just covered? Yeah. All right. So let's kick it off. So let's start off with trading idea presentations. So why don't I bring you guys up to speed first of what I kind of went over the past week, just so you guys get up to speed with everything. And then you guys can pitch your ideas as well if you have any. Right. So for starters, what I've been working on kind of the past week is improving our Condor martingales. One of them blew up, right? I don't know if you guys noticed, this thing blew up. It's basically the end of this strategy. So it made me think a lot about how can we have our cake and eat it too? Because this thing really made a crap load of money very quickly. It doubled the account, more than doubled the account in what, 2 months or something like that before it blew up. So we had some really, really impressive returns with it. So I was thinking a lot about how can we have those types of returns, like for example, this one here, without the chance of it blowing up. So I've spent a lot of time working on that. So let me organize my windows a little bit here. And I should also check if anyone else registered for this thing. Oh, there's two more people. Approve them. Yeah. All right. So where is this? I think, is this the one? No, this is not it. Not it, not it, not it. There we go. Okay. So here's a couple back tests I was running. All right. So essentially what I did was I took our martingale algorithm and modified it a little bit. Right. So here is using a higher delta, right? Up until now, we've really been looking at like deltas of 14 or deltas of 20. This one, I cranked it all the way up to 28 and got some pretty incredible results. 28, and then also I lowered the amount of contracts, right? So less contracts, but higher delta, and I was able to get a pretty interesting result here. So we got a 96% annualized return when we did that, right? And then over here, there's another one that I ran as well. I ran so many back. As you can see, I've been running so many of them. Okay, here's another one. This is essentially Martingale 1, but modified. Okay. So Martingale 1 starts off with a higher amount of contracts from the very beginning and then ramps up pretty quickly. This one I started at like a lower amount of contracts, around 5 starting off with, and then ramped up to 250. Right. This is a pretty realistic thing, I believe, if we were actually run this. 250 is going to be basically the entire account at that point in time. And then it cranked up the delta to 26. I got some very interesting results here. 157% of year returns, right? And this is over a 2-year time period. We did have some big drawdowns. Like here's one big one that happened, right? Here's another big one that happened, but recovered pretty quickly. I think this is the worst case that happened, right? So I think we could still expect it to every once in a while have some pretty serious drops, right? But still have a very high return at the end of the day, right? So if that's something that you can stomach, or for myself, if I were to run this, I'd probably run this with a slightly smaller account, personally. But 159% a year, 157% a year, is pretty crazy. Went from 25, so it basically did about 10x over this 2.5 time year period, right? So over 2.5 years, it was up about 10x. So we're looking at like NVIDIA type returns here, basically. I played around with a bit. So this is at a 24 delta. This is at 26 delta. This is at a 22 delta, right? And a 22 delta gets a lot safer, right? The max drawdown comes down quite a bit, right? So it goes from 50 to 46 to 26. So, I mean, personally, if I were to run it, I'd probably use something like this. It's my own personal preference, right? 26% drawdown. And then this one is a little, yeah, and this keeps dropping, and this is all just changing the delta, right? So that's kind of what I spent the past few days working on. I'm planning on running these strategies. So this one right here, probably this version of it, right? The 119% return version. I'm actually going to pull this out. I'm planning on running this one, and I think it was this one that I was working on. These two I plan to run in paper trading. So whereas this one is quite safe, or safe in comparison, at a very low drawdown of only 13%. I added in a lot of extra levels to it. So this one is definitely on the safer end of things. Lower return, but safer. Got rid of the pause after loss, all that kind of stuff. And then this one is kind of the more aggressive version of this thing. It has a higher drawdown, but also a much higher return. So these are the two that I plan on running in paper trading very shortly. I actually want to get them up today. I didn't get enough time to do that. I ran into some issues. But these are two that I plan to launch in paper trading. And actually, I'm debating whether to even put this with real money, because these are improved in many different ways from what we had before. For example, they trade every single day now. They don't take any breaks anymore. So you don't have that issue of if one person starts on Tuesday, another one starts on Monday, right? We don't have that issue anymore. Um, and it also has a lot more levels to it, unlike Martingale 1, which had very few levels, which is a big reason why it had that blow up factor, right? This actually fixes that issue as well, right? So yeah, so that's kind of what I've been working on, and planning on getting these things up soon, right? Any questions or thoughts about that?
Hey, Robert, can these new martingales can they handle a assignment? Will they sell if you get assigned?
Yes, yeah, they do.
Okay.
Yeah, so there's some
What's the
code in
account
here.
values you're going to start them with?
Sorry, what was that?
What was the account values you're going to start those with?
Well, the paper trading comes like starts at 100 by default, 100,000 dollars.
Okay. What's the
But
minimum you think you can run those two martingales?
I mean, I'm running one of them with like a $6,000 account. Like they haven't told me any issues with it. So this I ran with $6,000. I would imagine you could probably run as low as like 1,000 or 2,000 bucks.
Okay.
If you actually do the math on it, right? Because this is maybe you might want to run it with a little bit more than that, but where is this? Yeah, so it goes 1, 5, 12. So you probably want to run it with something like 5 grand and up, I would think. I think that would probably get you better results because if you do too much less than that, then you're kind of screwing up these quantities a bit because it's meant for a 25K account, right? So if you do a 5K account, you divide all of these by five, it runs a little different. So it'll be 1, 1, 3, I guess, or 1, 1, 2. So it'll be slightly different, but I think it'll probably run fine with like 5K. That's what I think.
Okay.
Yeah. Yeah, and I could actually be a guinea pig for that because I'm going to run this stuff in paper trading. And if this actually works out, I think these versions make a lot more sense because the one that I have running right now, even though it's up 12%, and I'm very happy with that, that'd be $1,000 in the past 2 weeks. I know that this one is quite dangerous, and it's only a matter of time before this one goes through some chaotic moment. So I'm actually thinking about even moving these two new ones that I spent some time discovering. I think I'll probably put my smaller account of like six, I guess $7,000 now. I'm gonna put into this, and then I'm probably gonna put my bigger account with like 25K into this. That's what I'm considering to do, assuming everything goes according to plan. Right. Cool. Any other questions, guys?
Well, for a martingale number five, if we want to run it with, for example, $5,000, then what should be the parameters for the bits? Do we just keep the default one, like what you're showing, like 5, 20, 50, 150, 250, or do we need to
Yeah, this
scale
should
that down by
automatically
five?
adjust. This should actually work a lot better with a 5K account because this divides all these by five. There's code in here that automatically does that,
Oh,
right?
so we don't need to. Okay, cool.
Yeah, yeah, because these are meant to do this compounded returns, right? And when you run it with compounded returns,
Yeah,
actually all of them will adjust to your account size, but even more so when it's compounded returns, it's going to adjust it every single day, right? So
I
as your
see.
account changes in value, that's going to change as well. There's this code down here. Where's this? Right here. If compounded returns, take your portfolio value divided by 25K and multiply that by the
Hmm.
quantities, like every single quantity, right? And then I also added this thing in here to make it a floor of one, right? So it can't fall below the,
Okay,
yeah. So
cool.
this is basically what's happening here.
Thank you.
Yeah, no problem. And let me actually, while we're looking at this, because I just realized it didn't change it for quantities to trade. There it is. I'm going to also adjust this. There we go. So I realize I only did that in one spot and not in the other. Okay, cool. All right. Any other questions, guys? Yeah, this is martingale 5, so this is the 22 delta. Yeah, 22 delta. Yeah, this is exactly what we have in here. 30. Okay, so let me actually even push this up to GitHub, right? New martingales 4 and 5. So this is now in GitHub. So if you guys want to run these things, you can run them right now. So by default, it's set up to run martingale 4, but you could change this right here to 5 or to whatever else you want to run. All right. Cool. Any other questions, guys? Comments, thoughts?
Hey, Robert, are you able to hear me?
Yep, I can hear you, Nathan. How's it going?
Going great. Thanks. For the ones where you're using the delta that has a more aggressive drop down, is there the possibility of working into the algorithm sort of a drop down threshold where it
Like a stop loss, that sort of thing?
yeah.
Yeah, so that's actually another thing that I worked on earlier in the week as well. So I did work on a what do we call it? We call it a stop loss, I believe. Yeah, stop loss percent. When I ran that, it didn't seem to really make things better, to be honest. If you want, we could play around with this today. Maybe the way it's implemented could be a little better. Maybe I just wasn't testing it the right way. But when I was using stop loss, I didn't really get any results that made me think this is a good idea. But the feature's there, and it'd be very easy for us to test out if you want to do that. Right? We could even talk about kind of, maybe we want to change the way a stop loss works or something. Yeah, because I agree with you. It's like this thing does super well and it's up 200% in 2 months or 100% in 2 months. Like, what if it just stayed there, right? And if things start to fall apart, it just like exited, right? So that's the same
Right.
idea that I had when I spoke to someone over the phone, and they're like, "Oh yeah, why don't you just add a stop loss?" Well, that's actually a pretty good idea. Um, but it didn't seem to give that effect, right? But again, maybe it's just implemented incorrectly. Maybe I'm using it in the wrong context. So I'm still open to exploring that a bit more if you want.
Rob,
Yeah.
it's Alan. Sorry, I just joined late. I had to put my kids to bed. So, can you just tell me what the strategy is? I've done a huge amount of analysis on the impact of stop loss. So, what's the indicator to go in and what's the indicator to go out of the trade?
So this is our martingale, condor martingale strategy. It puts on an iron condor every day at 3:45 p.m. and holds it till expiry the next day.
Okay. So, what you could do with this strategy, back test it with the stop loss and back test it without. And I'm going to guess you're going to get a higher profitability without the stop loss. I've
That's
done
kind
this
of what I
on
would
about
say.
40 strategies,
Yeah.
and I've done a gradient descent. And for the most part, most strategies, like basically all strategies, are more profitable without a stop loss.
I have definitely seen.
You just have to eat the loss, okay?
Yeah.
Because most, like, I don't have the data in front of me, but it seemed to be like 65% of the trades will return to profitability, and the stop loss gets you out too soon. If you look at so it's easy to test it. It would be fascinating to see. Anyway.
Yeah, I agree with you, Alan. Every time that someone tells me to put in a stop loss, I have that exact knee-jerk reaction just because I've done it so many times. Like every time they put a stop loss, like, yeah, it's a good idea. Put it in, doesn't work. Right?
Yeah.
I've just done that so many times that like I just have like a knee-jerk reaction to it. But then again, when you look at this strategy, right, there is a tendency of it to like fall off a cliff. You know what I mean? Like this to me feels like could be an exception, right? I could be wrong. I think exactly the same as you in terms of like my history behind this. Like every time I've tried to do a stop loss, it hasn't worked out very well. But when you see something falling off a cliff like this, maybe it could use something like a holy crap meter. You know what I
Sure.
mean? Yeah. This is
So when you're using the higher delta, actually, it mitigates the amount of drop down, basically, because when the delta is very low, then it does blow up. It blows up really high. when you increase the delta, then you get more frequently, you get
Hmm.
more blowups, but then the amount of blowup decreases. And then so because that's the reason you got such good results from higher deltas. You get a lot of blowups, but the amount is smaller, and then you make it up with this martingale. So that
Yeah.
may actually the way to go. So
Yeah, that's definitely what I found. What I did was I increased the delta, but I also increased the amount of levels. Right. So before we were doing 140, 100, 300, 900. So it's 1, 2, 3, 4, 5 levels. Now there's 1, 2, 3, 4, 5, 6 levels. Right. So I added in an extra level, reduced the amount per, and increased the delta. And that's what gave me these really good results. And by default, I was also, not trading trading every single day, right? Turn off all the stuff like skips days, right? So this skip condor last purchase, I turned that off, and I turned off pause after loss. So now it trades every single day, assuming VIX is in the right position, all that kind of stuff. And then just more levels and a higher delta. And that's what gave me these really good results.
the only problem is you need to have a lot of extra cash in the account in case the drawdowns happen early. Because if it
Oh,
happens
no, no.
early, yeah.
So this thing is actually made to adjust no matter what happens, because it's using this compounding returns, true.
Mhm.
And the maximum here is this 245 should be pretty much your entire account of whatever's left over, right? Assuming I got that correct. Maybe I did the math wrong, but this is what it's supposed to do, right? With the compounding on, it shouldn't matter when you joined. Even if you joined at like the worst possible time, it should still get you out of it.
I see. Okay.
Theoretically, at least if I did the math right,
Interesting. Good.
Yeah, that's the other thing it is. The compounding returns I turned on. Yeah. So like it's more realistic because when we ran the back test for the Martingale one, we didn't have compounding on, which made it a little misleading because at the beginning of that strategy, it did really, really well. It was like COVID years, 2020, just shot up like a rocket ship, right? And then this year, it would have had some issues, right? 2024 so far has been pretty volatile, at least in terms of this strategy. And on the back test, you don't see that because it made so much money at the beginning and then it didn't readjust itself because it didn't have compounding. So it looked like those were very small drops. But if you actually back test just that one part, or if you pretended that you started around there, it's a very different story. You're having a very different kind of return profile, right? So this compounding, I think, is really important to turn on as well. So that's the other thing that I did. So I turned on compounding. Yeah, and I think it should fix that issue that you're discussing. We can do the math if you want and go through it, but I'm pretty sure that should adjust for that. I spent a
Okay.
lot of time on this the past week.
Seems like yeah. It looks
Yeah,
clear.
definitely.
Looks clear.
Yeah, I definitely went pretty crazy with this. So I really want to get because like it was making so much money. It's like it frustrated me that when the accounts blew up, and I'm like, we got to be able to come around that. So sorry, there's some questions here. So 5 works better with smaller accounts. So Joseph, I wouldn't take it that way that 5 is better with a smaller account. I guess in some ways because of the quantities, but I personally prefer this with a smaller account. And the reason why is because it's a little riskier, right? The drawdowns are higher and it has a really high return. So I don't want to be putting like a big chunk of my money into something that I think is a little riskier, right? I'd rather have the bigger chunk of my money in something a little safer and then a smaller amount of my money into something that's more aggressive. That's the way that I think about it, right? But that could be different for you, right? I don't want to be giving any financial advice here. So, um, and Warren says, what about trailing stop loss? We could try that too if you want. We had some really good results with trailing stops when we did the butterfly. Um, Maybe we could have some pretty good results with trailing stops here too. I'd be open to try that out. The butterfly definitely had a good result with that. So that makes a lot of sense to me. Cool. Any other questions, guys? Comments, thoughts? So Ann M asks, how does the sentiment stuff work? The sentiment uses this thing called Finbert. It's a Hugging Face thing. It's right here. Uses Torch and this Finbert pre-trained model, and we basically take news from the from Alpaca. They have like a news API. We take that, we plug it in for this ticker, and then we basically have this model tell us is the news positive, negative, or neutral, and it also has a confidence thing on it as well. And if the confidence, what do we have it at? It was, I think, if it was actually it's adjustable. So we had it that as long as the probability is over 90 and it says that it's a negative sentiment, then it will not uh, trade on that day. It will skip that day, right? What we found in the past, though, is that you could probably get maybe even a more accurate sentiment reading from the VIX. So that's why we added in the VIX and we added in implied volatility. I think that's providing a very similar type of thing because the VIX kind of has inherent in it the news, if you think about it, if you know what the VIX is. But yeah, that's the way that the news sentiment works. I know Hauchi, you showed me that you had actually an improvement to that. So if you want, we could actually even integrate that today if you're interested in that. But I know Hauchi, he worked on some stuff to basically improve this even further, the sentiment portion of it.
Yeah, no problem.
Awesome. Yeah, thank you for that. Yeah, I mean, if you guys are interested, we can do that today too. I think that'd be cool to implement. So I think you're using Alpha Vantage as the news source instead, right? So it's a different news source, and I think you use a different model too, or is it the same model?
Right. So using the alpha advantage, what we are doing is actually directly extracting the sentiment scores and sentiment, the labels from the broker. So we're not running anything on our end. Like we don't load any model, we don't process anything, we don't do prediction. We just directly extract that score from the broker. Yeah. That's the difference between our way and the Alpha Vantage.
Yeah, that makes sense. So Alpha Vantage is calculating that themselves, and we're just getting it.
Right, right.
Yeah, okay.
Mm-hmm.
Yeah, so we can implement that too if you guys are interested.
So we talked also about last week. Jim and I were kind of interested in trying, instead of guessing by that sequence of numbers or matrix that you're using, to actually calculate the amount of drawdown each time that there's a drawdown and just bet as much each time. So that would require to change the algorithm a little bit. But that might be something you could try to be more precise in this algorithm and try to do that. I don't know if it's something we can do today. Yeah, that's on the list also. So
Yeah.
I'm just gonna remind you that maybe we can try that at some point.
Okay. Yeah, we could definitely do this. It's part of our list here. We already made this last week. So if you guys want, we can continue to go through this, right? That's definitely an option for what we can do today. Okay, cool. So yeah, so I feel like I took a bunch of time talking about this one specific algorithm. Okay, this is some more. Do you run each strategy on a different account, i.e. one strategy per account, part of my ignorance? Yeah, that's exactly how I do it. Yeah, I run one strategy per account. Because if you run more than one strategy in an account, they tend to confuse each other, right? Technically you can do it. If you're really careful, you can have more than one strategy running in one account. But the way that I think about it is if you're going to do that, then just combine the strategy code and have it be one strategy. Just because like you run the risk of like these things conflicting with each other, right? One algorithm's telling you to buy SPY, the other one's telling you to sell. The other one is saying, okay, use your entire account to do something. The other one's saying sell everything. Like they start to conflict with each other. So that's why I usually run one strategy, one account. Actually, I always run one strategy, one account. I definitely recommend to do that. You have a lot less probability of running into any kind of bugs. All right, okay. So so I feel like I've taken up a bunch of time talking about this one algorithm, right? But we can work on whatever you guys want to work on today, right? We do not have to work on this algorithm. We can work on something else if you guys are interested. I have definitely spent quite a bit of time this week already working on this. Um, but there's obviously always more things that we can do, right? We can always improve on it. So I'm going to put together our survey, right? So I'm going to say, what do you want to work on today? And I'm going to put as one of the options this condor martingale strategy, right? So again, condor martingale, this is martingale 5, this is martingale 4. I'd be interested in even making a martingale 6, maybe like a different version of this that includes some new features, but that's kind of what I'm thinking here. I know there's a few other things that people have brought up in the past that we can do. I'm just going to throw them on the list. I know that there's this AI trading bot, right, that you guys have been going over. I'll throw that on the list. There's the butterfly condor that I think is very interesting. The results are incredible in our back tests. Just so those of you that haven't seen this before, they are really, really impressive back testing results. Let me pull this up here. This is what it looks like. This is before we changed it, but the number here is 458% per year returns that this thing got. It's pretty wild. Although running it in paper trading, we're getting kind of different results. So I would love to figure out what the heck is the discrepancy, and if we can get our paper trading to match this, that would be freaking incredible. I don't know about you guys, but 450% a year sounds really appealing. So I'd be open to going over that as well. Right. And then I'm also going to put up here. I don't know if he's here today. Okay, I don't think he's here today anyways. But there was a bot where Eason came up with to basically capture dividends, those dividend capture bot, right? But I don't know if Eason isn't here. I mean, we could still go through it, but yeah. So I've added those 4 ideas to the poll. I'll show you what this looks like. I'll give you guys a screenshot so you guys can't see this. Anything else you guys would want to work on? Do you guys have any strategies in mind? Anything that's giving you a burning desire that you'd want to work on?
Well, I just pasted a suggestion. I think this just comes under the heading of the Condor Martingale, but since these are 0 or 1 DTEs, I should probably look at the VIX 1D rather than the VIX,
Okay, yeah, maybe.
because the VIX 1D is the volatility for the 1Ds, whereas the main VIX is for the weekly or monthly, or I think it's the weekly,
Let's
and they're
see,
pretty different if you look at the charts.
Yeah, if we overlay them, how do I add another symbol to this? What is it? It's VIX 1D, VIX 1D. Just add it. Just out of the way. Comparison. Okay, VIX 1D. Green versus blue. For some reason, green.
We got to zoom in. It's only been around for a couple of years. It's since the 1Ds came in.
Yeah. Okay. So let's zoom
There
in.
you go.
It seems to move a lot more. That's the first thing I'm noticing.
Yeah, well, they're one days rather than weeks.
Right. Yeah. So it has more volatility to it. That makes sense. Let's do 1 year. 1 year. Yeah. Wow. That moves a lot more. maybe that'd be more useful. We could try that out. That sounds interesting.
Yeah, that could work. Yeah, why not?
Yeah. Because that's basically what we'd want. We want to see these spikes, right? So maybe that could actually be quite useful. Okay, cool. Yeah, I'd be down to try that. Why don't I add that to the list? Use VIX 1D. Cool, good find. All right. Alan says I work on a Heiken-Ashi options trading strategy. Is that something you'd want to work on today, Alan? Is that something that you'd want to show to us, and maybe we can add it to a list of things to vote on?
Yeah, well, it's I've been working on it for a while, and I have basically what it does is you're just smoothing out the data, and it's trading SPY, but you're smoothing out the Heiken-Ashi response and buying it with a positive or negative EMA. So you don't buy against the direction of the market. Now it gets very complicated. It can get more complicated when you want to exit your position. You can exit at the reversal, or it's actually better to exit in steps. Let's just pretend you bought 10 contracts. The average span is about 8 bars before it reverses, but you sell a position every positive bar. So you sell up the hill. You don't sell after the hill.
Interesting. Okay.
Okay.
So let me repeat this back to you. So you're looking at, so how does Heiken-Ashi look again? I don't remember.
Okay. So Heiken-Ashi is smoothing out candlesticks. That's what it's doing. You don't trade the first 5 minutes of the day because the first 5 minutes is just a mess, right? The market's trying to figure out what it's doing. And then basically, you can use an EMA, a 3 or a 5 buyer EMA, and you're buying with the tide.
Okay, so it's basically like a momentum strategy.
Mm-hmm. That's right.
Okay. So Heiken-Ashi, this is smoothing out your candles. How exactly is it doing that?
So the calculations are a little different. So your close is the average of the open, high, low, and close of the bar.
Okay.
The open is, if memory serves, it's your open plus your previous close divided by 2, and your high is the max of the high, the close, or the open, and the low is the minimum of the open, the low, and the close. And it smooths out the bars. It gets rid of a lot of the noise.
Interesting. Okay, cool. So you use Heiken-Ashi candles, and then you're looking at an EMA on those candles
No, an EMA on the close.
on the close. Okay.
Okay. And don't buy against the EMA. So if the EMA is positive, you're buying calls. If it's negative, you're buying puts.
Okay. So you're just betting with the trend.
That's right.
Okay, interesting. So what makes you think this is a good strategy? Like what kind of results would you expect with this kind of thing?
Well, and right now I'm actually coding this in the program to try to backtest it with Polygon, but I have my own data sets, and it's doing 100% return a day.
100% a day. Wow.
It's doubling its money every day.
That's pretty crazy.
But I need to verify that. I'll just tell you right. I need to verify that. So I'm trying to put it in Polygon to then use their larger data set.
Okay.
But your average trade is making about $18 a trade per contract, right?
Okay. And is this is like a market scanner, I'm assuming, right? Or is this
No, it's not scanning. It's just trading on the bars.
so what was it trading? Trading SPY?
Yeah. Oh, yeah. Sorry. Yes, it's trading SPY.
Trading SPY. Okay. All right. Interesting. Okay. Cool. I mean, 100% a day sounds appealing.
So,
know that.
like it will do on my data set. It's on a 30-day average. It's returning 100% return a day.
That's awesome. Okay. Yeah, I mean, this doesn't sound like something that's too difficult to build, to be quite honest with you.
No, I know.
Yeah, I was just looking,
Well,
I was talking to Robert McCloyd. We had a little chat yesterday, and we were talking about this exact idea about looking at the first 5 minutes for direction. And so I've been playing with going through and getting loaded up with a whole lot of polygon minute bars with the using the flat files.
so
But yeah,
what
this will
I've
be very interested to see see how this works.
yeah, so the first 5 minutes of the market is a mess, right? You can't. People are balancing portfolios, and there's such a huge range in price. You don't trade it, and you only trade this strategy for the first 2 hours. You trade until 11:30, and you use the last 30 minutes to close your last position.
Okay.
Well, but you've done the study that, like, say, one of the things that I was really wanted to see is what is how strong is the correlation for
My
the
indicators have a 0.92 correlation.
wow, yeah, so that's what I'm still going to calculate it myself, but
You go ahead.
I was
I've been working on this for the last year and a
it
half.
sounds awesome.
So I discovered it's all about correlations. If you
Yeah.
don't have correlation coefficients that are strong, so for example, the indicators have a strong correlation up until 11:30, and then they fail in the afternoon. They drop to 0.5, 0.4. There's another market force affecting the market in the afternoon. I won't even bother trading it anymore
Yeah.
because the same indicators, they don't work in the afternoon. It's like there's a crosswind going across the ocean, so you can't sail in or out.
Yeah, well, there's a lot of stuff going on, but yeah, I
So
mean, these super.
Cool. Sounds very interesting. Okay. So I'll add to list. We can if you guys want to vote on it, we can build it today. Cool. Anything else you guys want to work on? All right, okay. So I have 5 strategies on here that we can work on today. I'm going to save this. I'm going to launch this, and you guys can go ahead and vote. While you guys do that, I'm going to go get some water. I'm going to use the bathroom, and I will see you guys back here in 5 minutes. Whatever you guys vote on, we can work on that today. All right, be right back. All right. Hey guys. Hey, so we have pretty much everyone voting except for two people. Um, I don't think that'll make any difference anyways. You guys voted very strongly in one direction. Okay, so let me share with you guys the results of the poll. This is how you guys voted. It should have popped up on your screens in case it didn't. These are the results. So you guys really want to do this Hakanashi thing today. All right, cool.
Long momentum, baby. Let's rock and roll.
Let's do it. Alan, you definitely got some hearts and minds captured there, huh? All right.
Let's see how it goes.
Let's see how it goes. All right. Okay, cool. So let's get started on this. So by the way, the Condor Martingale, you guys can use that if you guys want. I already told you about all the things that are available there. Right, and then let's start up a new project here. And this is an options trading strategy, right? Options.
Yep.
And then how the heck do you spell Heiken? Heikin. Heiken EMA. Options Heiken EMA. How about that? Okay, there's that strategy. Let me copy over one of our other strategies so that we can start off on the right foot here. So I'm going to copy all this. Paste into here. Right, you can delete these tear sheets because those are for another strategy. And here's the main file. Delete this strategy description because that is no longer true. Delete this. Delete all this. So this is the way that I'll usually start a new strategy. In case you guys are wondering, I'll basically take an existing strategy, copy it, and then delete a bunch of stuff. Right? That's usually the best way that I find to start something, to start a new one. And then also what I'll usually do is I'll keep part of the old strategy in here. Right? So here's like all the stuff for butterfly, whatever. I'm going to keep the majority of this code here, even if we're not going to use it. And the reason why I do that is for the AI to pick it up, right? Because if we leave this code commented, right, this commented code here, right, so it's not actually going to be working. But if it's there in the file, whenever I start typing things, it'll automatically recognize how to do stuff, right? Because it already has seen it down below in the file, right? So that's a little trick that I use. And Garley, yeah, if you want to get the recording of this, it's going to be on YouTube, because I'm live streaming to YouTube right now, so you can get on our YouTube channel. Or of course, if you join our Pro plan or All Access plan, you'll get the recording as well. And that's available in lumiwealth.com under course recordings if you're a member, which I'm not sure if you are. Okay, cool. All right, so and then let's rename this as well. We'll rename this to be no problem. Okay, options, Heiken, HEIKINEMA. Okay, options, Heiken EMA. And then scroll down to the bottom here. Back test. I've started to do this, put the back testing time period up at the top.
So just so you know, you will get significantly different results between the 1, 2, 3, and 5 minute bars.
Okay,
Okay.
that's good to know.
So
So
you have to test it for all of them.
okay.
Like, yeah. I've got to go put a little kid to bed. I'll be back in like 10 minutes. Okay.
Okay. All right, sounds good. I guess I'll start putting things together. Is there something that I could look at to help with putting it together, the beginning part?
Well, what you want to do is you want to bring in SPY, convert it to Heiken-Ashi, and then do an EMA on the close of SPY, and see if it's positive or negative. And if it's a green candle and the EMA is positive, you're going to buy. And when that candle goes red, you're going to sell. You're going to sell the call. And if the EMA is negative and your candles are red, you're going to buy a put. And as soon as you get a green candle, you're going to close the position.
What do you mean EMA is negative?
So is the EMA positive slope or is it negative slope?
Okay, so it's a slope. Okay.
Yeah, that's all we're after.
Okay, so green
We're not
candle.
after the second derivative. We're not after the third derivative. We're just is a positive slope or negative slope. So if it's a positive slope, you're going to buy a call. If it's a negative slope, you'll buy a put. As long as the candle is red, you'll buy a put.
So red candle, negative slope, put.
Put.
Green candle, positive slope, call.
And you want to buy it 1 day out of the money. Or sorry, at the money 1 day out. Okay, the theta will kill you on the same day.
At the money, 1 day out. Okay, what, like a 1 DTE?
That's right.
Okay, all right. So I'll write this down really quickly. Okay, so one was get SPY historical prices. 2, calculate Hakanashi candles. 3, calculate the EMA of the closing prices. 4, calculate the slope of the EMA. 5, if the slope is positive and candle is green, then buy a call. And then if the slope is negative and Hakanashi candle is red.
See, the AI knows what you're talking about. That's exactly it.
Perfect.
Okay, I'll be back in 10.
Okay. All right, cool. Okay, so start building this. Yeah, Joseph, the AI is awesome. This is GitHub Copilots. I wouldn't be able to code without it personally, you know. It's such a big part of my workflow these days. Okay, and we have 5-minute candles. So he also mentioned that the candle size is pretty important. So we should probably do that. But we can get to that afterwards. Okay, so first thing, get the historical prices. Right, there we go. Calculate the Hakanashi candles. HA close. HA open. High, low. Yeah, this AI is pretty incredible. If you thought that was cool, this is even cooler, right? Basically gonna write this. Calculate the EMA. Right, that's assuming a 9 EMA, last EMA value. Get the last HA candle. Check if the slope is positive. Right, there we go. Buying a call option. Check if the slope is negative. Yeah, if you thought the AI was cool before, it basically just wrote an entire thing right now. This is our strategy. Basically all of that done. We're gonna make some modifications to this though. But this is pretty much the whole strategy here, except for the actual buying of the call option. So we can go ahead and do that in a second. But before I do that, I want to add in a few things here. I want to go EMA length. We'll make that a variable. EMA length. There we go. I also think that this could be cleaned up a little bit. Get the DF. Right, because this is a little messy. So I'm going to, yeah, this is a lot easier to read than the other one. I'm going to high. Okay. And calculate the EMA. I'm also going to do a little bit simpler here. And then also this. kind of clean this up a little bit. Slope is positive. It's a pretty basic way of getting the slope. It's basically saying the last two candles, right? I wonder if that's enough for slope, because slope can be, it's different ways you can get the slope, right? Like how long of a slope are we talking here? Right. So I'll wait for Alan to get back so we could do that. But in the meantime, I'll call this get the second last HA, get the last. So this is actually not doing it correctly. This is get the last HA candle, last EMA. Oh, this is where it is. Okay, get the second to last EMA value. There we go. And this is basically how it's doing that. It's saying if the last EMA is greater than the second to last EMA, then we're sloping up. Otherwise, we're sloping down. Maybe it's a little simplistic. We have that. And then he also talked about candle size is very important. So in this case, we're assuming 1 minute candles. Let's say that we can have candle size, candle length. Let's say candle size, I think is a more appropriate way of calling it. Candle size. This will be in minutes. Let's say like 5-minute candles, for example, would be like this, right? The size of the candles in minutes. Perfect. It's a little candle size. Now this is getting days, so we gotta go minutes. And now if we're talking about candle size, we're gonna have to get a certain multiple of that going backwards. We could say, I don't know if we want to introduce a concept of like look back period, but calculate the number of candles, number of minutes to get the historical prices. Right, so you're gonna go 100 times candle size. I don't think we need 100 times. I think we'll maybe get like 10 times candle size or something. I can actually swing strategy. Oh, interesting. Swing action trading strategy. Oh, interesting. Okay. There's an entire course on just this. That's kind of wild. People have courses on everything, huh? Components of Latvian Heikin-Ashi system, the river, moving averages, RSI. There's a lot of details to this, huh? Thanks for sharing this, Stacy. Gap between success and failure. There's a lot to it. Cool. Okay. Yeah, we should send that to Alan. I wonder if he's seen that already, or if he'd find
No,
it.
I haven't seen that.
Oh no. Oh, you're back already?
Oh, well, no, someone didn't go to bed yet. They still have to go to bed.
I was gonna say you put him to sleep real quick.
So for the EMA slope, you just need the last two periods. Is it positive or negative?
Yeah, okay. So last two EMAs. Okay.
Yeah.
And then candle size, 5-minute candles, like what are we talking here? All the way to an hour
So you
candle?
go, I found 1, 2, and 5 work the best. 3 seems to fail.
Okay.
But you want to test them all.
Okay. So let's test as a 5 for
Yeah.
now. All right. So we'll go. So it's candle size like this. Okay. And then here, let's say it's 5-minute candles, so it'd be five times 10, so 50. I don't even know if we need to go back that far. We probably
But
only need,
you really need 3 times the length of the EMA to get out the noise.
oh, okay, 3 times the length of the EMA. That makes sense. Okay. So we want to go
But what
EMA
happens, my
size.
experience is, you have to start your calculations from the second bar of the day. Okay. You can't use any historical data for options. It's pointless. Like if you're trying to pull if you're using regular trading hours, it's going to pull SPY from 3:30 till 4 o'clock the day before, right? And that will impact your Heikin Ashi or your EMA candles. But in the morning, in 9:32, at 9:30, those numbers don't mean anything anymore.
Right.
Comes back to Markov's law, right? The historical data is just pointless from the previous day for anything to trade options.
Yeah, that makes sense.
And the first candle, your open, is going to be, basically, it's a mess. Your first time period of the day. So you don't want to, you just sort of trade after the first minute because that will skew your EMA significantly.
Okay, so when do we want to start trading then?
9:32. Like
9.
9:32. Like take the second, like don't worry about the first 2 minutes of the day. Because those candles will make a mess of your day.
Yeah,
Your data.
but we don't call the start time is market open plus a minute plus the number of bars for the EMA plus the
Right.
bar duration. And at your first trading iteration is at the time you will start trading. And at that point you get the backwards K bars, which will include not the first minute. And so, yeah, so that time, so the parameters are the bar width, the bar duration, the number of skipped bars, and the number of bars that to be included.
Yeah, that's what I was getting at exactly. Yeah. So so we're getting the data from 9:32, but we're not actually starting trading at 9:32.
Yeah.
Right.
Yeah. So so the start time could be computed from those three parameters.
Yeah.
The number of bars to skip, the number of bars to include, and the bar duration.
Yeah, for the most part, you sort of start trading about 10 to 10. You wait for the market to clean itself up, and
so 9 times
or 10-10. Yeah, I mean, so you don't need to even compute this until you're ready to start trading.
So 9 times 5 is 45 minutes. And then you said times 3. That's going to be
these are minute bars.
Yeah.
1,
Yeah.
2, or 3. 1, 2, or 5-minute bars.
Yeah. So if it's 5-minute bars,
yeah,
times the length of 9 times 3. Right.
Yeah. And the number of, and you want to and then what time to skip, right? So I guess maybe you could set that as a time rather than the bars. If it's just going to be, if it's skip 1 minute, regardless of the bar length, then we would need a start time for the to fetch the data as well. So like there'd be 9:31, right?
So what do you mean by that exactly?
So you say so if you're going to skip the first minute of data, where I was assuming that the skip time would be a multiple of the bar length. So Alan, so we just skip a minute or do we skip a bar?
Well, if you're using a 5-minute bar, you'd skip the first bar, right? So the first 5 minutes.
Okay, well, that's what I was wondering. Okay,
yeah, you're
so
correct.
we just need
that's correct.
So we need those three numbers. I mean the three parameters, and then the start time is when you're going to start trading, right? So the trade starting time, the first iteration.
Yeah, so just say
like,
your first start
that's
time
like
is like
10:10 or
9:50.
something, right?
Start at 9:50.
9:50. There you go. Yeah.
Okay, so just in general, start the strategy at 9:50.
That's right.
Yeah.
Okay, but
you got
that isn't going to make sense with 5-minute bars though. So if we go 5-minute bars,
you're not going to want to trade this on 5-minute bars.
Sorry, what was that?
You're not going to want to trade this in 5-minute bars.
It's going to be 1 or 2 minutes.
It's 1 or 2 minutes.
The first 5 minutes that we're after. That's really the point of this scheme.
Yeah. Okay. So say
and then you need number. How many candles to skip? You're gonna skip the first bar of the market
Okay.
open.
Yeah,
Okay.
but by 9:50 it will be less of an issue, right? I wouldn't worry about it for now.
Okay. So we just say 9:50. That's when we
Yeah.
start.
That's right.
Okay. All right. We'll start. Okay. Get the current time. Self get date time. And then we want to convert New York time. Okay, and then check if it is time to start trading. If current time dot time is less than start time, the return. Okay. Otherwise, we keep going. Okay. We can even put a log here. Log. It's not time to start trading. Okay. Yellow. Red is a little too intense for that. Okay, so we wait until 9:50. Okay. And then at 9:50, we then get our historical bars. We're also going to have to aggregate the data to the candle size. Okay, so there we go. We sample it. And then we do the Kanashi, then we do the EMA, then we check. Okay, I think this is it. I think we should be good to go here. Anything else you guys see that I'm missing? Okay.
Where's the actual buy the option code?
We don't have that yet. So right now
okay.
it's just a log message. Yeah. So
All right,
I'm
got
gonna put that in later. Right now I just kind of want to get the logic working, and then we'll add in the buying and the selling and all that. Because there's more to it than that too. It's like we have to buy it at the money, and then we have to buy one DTE, and then we have to think about when we sell it. So there's a bunch of other stuff, but this is kind of like the initial, like how do we get in, right?
Got it. Good.
Invalid time span. What are you complaining about?
I'll be back again in 10 minutes.
Sounds good. Cool. Good luck. Why is it saying invalid band response? Time spent only support resolutions are 1 minute. Oh, I think this is, we have to go asset length, it's minutes, and then timestamp is minute. I don't know why I got that weird thing. All right, there we go. So we got this. Let's see what our data looks like that we got. 14. Okay, this is all same day. We might want to do something that cuts off. This is 13:56. That's in UTC time. What is Eastern time? It's UTC minus what? Actually, let's do this more recently. This is in 2020. Let's first of all change the date to be 2024. Because then we need to know daylight savings or not as well. So let me restart this. So 13:56. So we go, what is 1356 from UTC to Eastern?
I think it's 4 hours.
Yeah, I think it's 4 or 5, depending on.
Daylight savings is 5, and non-daylight savings is 4.
Right. So non-daylight savings is in January, right? January is non-daylight savings.
Right.
Okay. And this is 1448. So it's 1048. Why is it all the way at 1048? Current time, 950. So 14. This is -5 at this point. And we're right now at -4. So this is all -5. So if we go here, 13 minus 5 is what? That's pre-market, right? 13 minus 5, that's 856. So we probably want to cut these off to start of the market anyways, right? Because if we go back further than that, then we're starting to get some weird stuff going on. I don't know if that's something that Alan wants to do, but I'm assuming that that's the case because I think he said from 32 after, right?
Well, or 31. He was saying you're skipping the first bar.
Give the first bar, yeah.
So whatever the bar length is. So you want so you had a number there with the EMA length. So you want, you know, EMA length plus 1 bars and skip the first one, or you got to start 1 bar after the open and get the EMA length bars. You don't want any data from before the open.
Yeah, exactly. So I can pull in this historical data and I could here just cut it, remove, drop any values before
Well, why
9:30.
don't we just set specify the time for the ones we want? I mean,
Yeah, but then if there's missing bars, that causes problems. Like it's easier just to get more and cut it rather than like try to get like the exact amount from them because weird stuff happens with the historical prices thing. Like I just feel a lot more confident.
well, but I thought we had a start time parameter and a start parameter in the get historical.
No, we don't. It's just the length. There's someone who's talking about doing the start and end, but that got implemented yet.
Yeah, I was redoing the Polygon, I mean the Alpaca data source because we really only need one. And we can unify the implementation of historical and live market into one API. So
Yeah.
but, I haven't worked on it in a couple weeks.
Okay. Yeah, because right now we can only go back in terms of length. We don't have like a start and end time. But I think that'd be really useful, having a start and end time. The only complication with that is that you have to make sure it works with other brokers too.
Yeah, I came up with a change that does start and or end or length that can all be unified into a single column.
Right. Yeah, absolutely. That'd be very useful, I think.
But if you use the strategy get prices at the from the during the trading iteration, you can compute the number of bars back to the start of the market and just get the last number of bars you want. Don't use the historical, use the strategy get prices.
Strategy get prices, what do you mean?
Well, if you use get last prices, right? Or there's a get prices right in the strategy that gets bars from the current time. So you can just get however many bars back to the market open.
Well, that's get historical prices, no?
So there's a strategy get prices that goes from the current time, right? get last prices.
Yeah, get last price and get last prices. That's just a single price point. That's
Right,
just
but last prices takes a number of bars.
no, prices takes a number of symbols. Right? It's assets. That's why it's plural.
Okay.
Yeah.
All right. I guess I haven't coded in a strategy for a while.
Yeah. Yeah, but I agree with you that we should have that feature. I think that would be very useful. I definitely agree with that. Okay, so we have this here. Those 1, 2, 3, 4, 5, 6, 7, 8, 9 bars. That's just enough to get this EMA length. Right, so now we go through. I'm gonna say, okay, last EMA is that, second last EMA is that. So 472, 472.03. Right, and then okay, so it's gonna go one way or the other. So here, okay, last EMA is lower than second to last EMA. And then now we check Hakanashi open, Hakanashi close. It'll be a lot easier if we could see these values. I'm gonna do that. Last HA candle. Get the HA open and close. Okay, and then we're going to change this up so it's a little bit easier to debug. And I'm going to rerun this. I think this is pretty good for the entries. I think this should get us far for the entry. So next thing is going to be now we got to buy the option. And then we got to talk about exits. Okay. Min. I'll run it. Okay, let's see when it actually hits a point that it's ready to buy. Just gonna let it run until it hits that point. There we go. Okay, buying a put option. Okay, so this is a point where it's going to buy a put option. So now we actually have to write in that code. Okay, so let's make a function called def buy option. So symbol strike rate quantity. Create order by. Okay, but this needs to be, we're going to figure out expiry. Strike, we're going to figure out as well. Right and quantity. We'll probably have to have like a dollar amount or something. So first we want to go get the price of the underlying asset. Round price in US dollar to get the strike. Okay, so there's your strike price. There's symbol, asset type option, expiry. And then the expiry is always a little bit of a pain to do. It should be one day in the future, but the thing is, if it's over a weekend or long or a holiday, then we need to bump it. So we'll go DTE. Maybe we'll see this. We'll say DTE, days to expiry. Go option DTE. So one DTE option. So you'll pass that in. Right, and then calculate expiry date. It's our date time plus 1 day. in this case. And then there's our option. And then what we should do is we should say, get the price of the option. Okay, so we're going to loop through this. We start off option price. If we got a price, then break because expiry is valid. Good. Got none, break. Okay. Increment the expiry by 1 day. Right. And then we should have like a counter. Say max. We say iteration, iter count. 0. Say even less than, we say 5. Then return to the get price. Say. Because we weren't able to get a price, but otherwise everything is good. We got a price, okay, which means that this is all good to go. And then if we have a price, then we could also say amount is like a dollar amount that we want to put into the trade. Right, and let me actually make a little documentation thing for this. Okay, parameters, symbol, this is a symbol of the underlying asset, the right, call or put. DTE is going to be an integer, number of days of expiry, amount, the amount to spend on the option. Okay, perfect. That returns true if or successful, false otherwise. Okay, cool. So it's a nice description of what this does. Okay, and then we have to calculate the quantity to buy. There's going to be amount divided by option price divided by 100. Always forgets by 100, and that's the quantity. Check if the quantity is greater than 0. Okay, if it's less than 0, return false, and submit the order, return true. Okay, so this looks good. So here we'll go buying a put option. Buy a put option. Option DTE log that we're buying an option. Put 0 DTE 100. Let's say we'll make amount here. Amount per trade. Say $100. Maybe we'll say, let's say $200 a trade or something.
Yeah, the option will be between 160 and 220, the contract.
160 and 220 per contract. So how much are you buying in total?
You're gonna buy one contract.
You can buy one contract.
Yeah.
Oh, okay. So I was
Well, if
messing.
you had $1,000, you could buy like 4 contracts.
Yeah, so usually like whenever we do this, we'll say what is the amount they want to trade each time.
Yeah,
Right. So if it's like $200, they'll buy you one contract basically.
that's right.
Okay, so why don't we just keep it? You want to just keep it like that for like dollar amount?
Yeah,
That's
I
easier to
would,
scale up and down, right?
sure. For a back testing methodology, though, I found doing this, it's better to say just trade one contract a day. And then over your period of days, you can determine what is your return per day. You follow me?
Yeah, sort of. But when you're putting to a back testing context, like you're having an account size.
Yeah.
So the amount of contracts that you buy is going to heavily depend, like your back test results going to heavily depend on this
Oh
number.
yeah. Yeah, yeah. They're measuring two different things.
Yeah.
So You do that. That's fine.
Yeah. Okay.
That's totally
Cool.
fine.
Okay. Awesome.
Well, trading a unit size is also, I don't know if it was Alan or who we were talking about last time about that you can greatly speed up your back testing by using unit size trades, because what you're looking for is the, if it's a single or whatever, however many days trading here, it's a 1 day strategy. You don't want the conditions to change from day to day. You can apply that externally. Things like, oh, I'm going to trade more. What you want to know is the return rate on a unit size. We're looking for the percentage gain. We don't care about the absolute value of the account.
Yeah, exactly. Exactly. So, um, I think this would even be better, like percentage of the account to trade. Maybe that's even a better
That's
way.
for an actual strategy, but for the back test, we don't want that. For the back test, we want a fixed size.
Yeah, but it's going to skew your results a lot. Like I get what you're saying. I get what you mean is that like, yeah, if you just trade one, whatever, but when you actually get the result in your tear sheet, that's going to matter. Like your results are going to be way off. You know what I mean? Unless you're scaling it
Oh, I
properly.
didn't. I meant a fixed size, not a one. It's just you trade the same amount. You have the you you yeah
They're
you
two
want
different
to fix.
measures. They're two different indicators,
Yeah,
right?
yeah.
So
Yeah.
it doesn't matter. Just do it this way. That's
Okay.
fine.
Yeah,
All
okay.
right.
Trading, you're gonna want to be compounding. I mean, in like real trading. So I mean, might as well make the back test reflect that. I would kind of approach it that way.
Yeah, it makes sense. Yeah, I actually think account size is the best, right? Because you're gonna go, you know, not $200 would be like 5% of your account. So if you have $10,000 in there, 5% of your account is gonna be very different than if you have $1,000 in there, right? Like I actually think that's probably the better way to do, like percent of account, percent account per trade. Either way, it's not that important right now. Right now, we kind of want to get. I think we'll probably want to switch that eventually, but we can right now just see if the logic's all working. Right, we can tweak that later. In this case, quantity was 0 because option price was $1.72 for the contract. That's pretty expensive. So if you're doing $100, why is the amount 100? Oh, because it didn't. Um, actually, let's just do that now. Why don't we just do that? So percent portfolio per trade. We'll say we're trading 5% of the portfolio. Okay, and then here we'll have to like actually calculate this. We'll go get the portfolio value, right? And then calculate the amount to spend on the option. Portfolio value times percent per trade. There we go. And then this will be the same thing. This way it actually does scale up. So it does have that compounding effect.
I guess this is assuming we have a profitable strategy.
Yeah, exactly. It'll compound in one direction or the other,
Yeah.
Yeah. Yeah. Okay, cool. All right. So let's see this. So I think this should actually be placing these trades. And we haven't talked about exits yet. So we gotta cover that. Okay, so there we go. It's buying a put. Yeah, and as of right now, it's just gonna hold it till expiry. There's nothing to get rid of it. So so Alan, how do we sell this now? How do we exit out of these positions?
So if you bought a call, as soon as you get a red bar, you're going to exit the trade.
Okay.
And if you bought a put, as soon as you get a green bar, yeah, it's exit the trade.
Okay. And then you mentioned something about it's exiting as it's going up as well.
But don't worry about that. That's way too complicated beyond this.
Okay. I bet you we could probably put it in.
Selling up, it's too complicated at the moment to go through selling uphill.
We could probably do that. I mean,
We can do that later.
Yeah, we could do it later. Yeah, we'll stick to the simple stuff first. Okay, so I guess so that's question one. But since you brought that up, so question two, can we be in both the call and a put at the same time, or are we only in one trade at a time?
You're only in one trade at a time.
Okay. So in that case, we need to be checking what our positions are. We'll go get positions. And then if we have, actually, it might not even be fast enough. I've done this before with other people where, because sometimes options take a little while to fill. And if we're doing, actually,
You're
I
going to
guess,
buy them at the market price.
yeah, we're buying at market, and I guess it's 2 minutes per iteration.
Oh, no,
So,
it'll be fine. It'll
yeah.
make the trade in about 7 seconds.
Okay. All right. So then we could just check the positions then. Okay. So before even any of this stuff here, we want to go get our positions, get positions, and then check if we have any positions open in options. All right, so position, asset type position, saying it's closing it. No, we do not want to close it. Own option false. Say own option true. Break. And then if we own option, then return. Right? Because we don't need to do any of this stuff. If we already own an option, we don't need to calculate. Actually, no, we do. We do have to do that, right?
Yeah,
Because bars go against you.
Yeah.
Right. So it's doing all that stuff. Okay, but we don't go into the buying portion, right? So check if we have any open positions, and then if we do, don't even bother going to buying this stuff. Right? Okay. And then if own option, we should probably make another thing for this. So this is now to sell. Should check sell option, or I guess we should do like check for sell. Right? And okay, so we want to basically check if we should sell the option. So so entry, so this is entry. So exit rules is if we own the option, then check if we should sell it. Yeah, obviously. So it's if
we want to check and see if it's a put or a call. Right? So if it's a call, then you want to find out is it a green bar or a red bar? If it's a green bar, you hold it. If it's a red bar, you're going to close the position.
And the slope of the EMA doesn't matter?
Doesn't matter.
Okay.
The slope's the EMA won't change till 2 bars later.
The Hucken HEI candle is red, exactly. If it's a put, sell when the Hakkanashi candle is green, right?
It scares me how smart this is.
I know, it's crazy, right?
Oh, yeah.
It's nuts.
Hey, Alan, is this based on the closed Heikenaushi candle, or is it like while the candle's forming?
No, you have to wait till the candle closes. I've done a bunch of research on how confident you can be within 50, 70, 80, 90% of the candle, but I don't have that data in front of me. Because then you're trying to pull up like 40 seconds into the bar to run it, and it's not worth doing that at this stage.
Got it. Yeah, I don't think we have that capability anyway at this point. Because we have a 1 minute minimum, I think.
You can get your data. You can get real-time data from interactive brokers. But it's for this. It's a double-edged sword using 1 minute bars, right?
I apologize. I missed the beginning of the meeting. What size candles are you using for this strategy?
Well, I found one to be the best. 1 and 2 minute bars work great in my testing, and then 5, but 3 seems to fail. It's just kind of weird. 3 minute bars perform less well.
It's interesting.
Yeah, it is. It is weird how the market cycles through it. No, just so you know, so I built a SPY testing database. I have 3 different databases, and they each run 30 days of trading days, and the results are consistent across all 3. So I'm building essentially this strategy right now. But since Rob's doing it, it'll make it easier for me to test it on the Polygon thing over different time periods.
Yeah, cool.
Okay, so for Hakanashi candles, if the close is higher than the open, then it's green,
That's right.
and then opposite is red,
Yeah.
right?
Yeah.
Okay, so get the symbol, the option. What did AI come up with here? Symbol, okay. Get the last price of the option. That is not correct. You can get last price returned. Why are you doing that? Okay, this is just HA open, HA close. That's all we need to do. Okay. Check if it is a call option. Okay, if right is call, right dot lower is call. Check if the HA candle is red. Okay, selling, okay. And then check if it's a put option. There we go. This is a sell. Option position quantity, cool. All right, I think this should be it. So let's refresh this. Let's see if this does it. I'm really interested to see if this does 100% a day. That'd be pretty wild. Okay, so we're buying a put. Okay, so we bought a put. Now we own that put, and now we check. Now we're checking till it goes bad. Okay, so right now we're in a put. HA open is 471. HA close is 471.60, 471.50. So this is the case. So now we sell. Okay, cool. So now next one, we'll check if the slope is negative. Okay, so now question is, if we exited out of it for the day, can we enter in a second time in the day?
Oh yeah, you keep trading.
Keep
You go
trading.
in and out until, let's just say, noon.
Okay. Oh, cool. Okay, interesting. Okay, so I think this is it, right? Like, I mean, I think this is exactly what it's supposed to be here. And this is sold. Okay, why don't we run this? Let's back test this over a short time period. Let's see what happens. Let's see if we get that magic number.
Let's see if it does. Oh, let's see if it does like 38%.
I'd be surprised if it was positive. Yeah, first time whenever we run a back test, that's like if it makes money, that's a very good start. So far it's making good money though. It is up a lot. Oh,
And I haven't even told you all the secrets of the strategy.
oh yeah. Yeah, I'd love
I've
to
been
hear.
working on this. I've been doing this for 3 years now, trying to figure out how this stuff works.
Yeah, I remember we first spoke a couple years ago and you're doing this. Yeah. I remember.
Now, the big thing for me, what I discovered is I should have been doing correlation coefficients earlier, and you really need to break them down by half-hour increments in the day, because the same signals. This is just, I don't know if you guys are doing. I'm new to the channel, guys. Sorry. Um, my background is a data analyst. But what I discovered, and I should have done this earlier, is you need to do your correlation coefficients by half hours, because the same indicators will have different performances in the morning versus the afternoon.
Yeah, that makes a lot of sense. I've heard this from many different people. Well, so far it's looking like it's breaking even. It's going to take about 5 minutes to finish. So while that's going, I'm going to go get a glass of water because I just ran out of water. And I'll see you guys back in like 2 minutes, right? You can watch this. So far, we're up a little bit. Start off at 35K. Now it's up at 37, 38. It's moving a lot because it's downloading stuff, but we're up a bit. We're making money so far. It's a good start. Yeah, I'll be right back.
So is this trading in the mornings or the afternoons
Mornings,
strategy? Okay.
trades in the mornings.
Is this just one trade per day? I missed that part.
No, it's gonna basically you start at roughly 9:40 or 9:50, and you let it trade until noon.
Okay.
That's it. Yeah, what I found, well, I was trying to figure out why these indicators why you couldn't. So I've been trading something very similar to this manually, and some other things automatic like through algo trading. And what I discovered is I'm like in the afternoons, what is going on here? Like I know the lunchtime is kind of messy, so then I'm like, what's going on at 1 o'clock? And then after 3:30, there's essentially a different force working on in the afternoon, and the same indicators would just fail. I don't know if anyone else has done that sort of analysis, but I'm like, what is that about? There's no correlation in the afternoon. It goes from like 0.92, 0.96 to like 0.4, 0.3. And I was like, what is going on? So I just sort of found that there's another tide or crosswind that's affecting the afternoon trading. And there I cannot find anything that's really solid in the afternoon.
Yeah, I think you're right. From manual trading, I can certainly corroborate that. There seems to be three periods: the morning, afternoon, and the last hour. It changes again.
Oh yeah, yeah. If you want to gamble, like you never know what somebody's going to do, right? And the market makers are moving, and
Yeah.
you can't go against the tide, right? Like the tide's coming in, or they're going to do what they're going to do, right?
Yeah, exactly.
So
where are you based in the world?
I'm in Toronto.
Toronto. Oh,
I actually live not far from, well, about an hour's away from where Rob lives.
oh, terrific. Okay. My mother was born and grew up at 77 Elm Avenue in downtown Toronto.
Oh, well, I'm actually from Nova Scotia.
Oh, okay. Nice.
Where are you guys from?
I live in Northern California near Sacramento, the capital.
Oh, that's a great place.
Yeah. Rob came out to San Francisco and visited, so we had lunch.
Oh, cool.
So the link that you put in Stacy put this in the chat, the Ikenashi strategy. that's not what we're testing here. This is your own strategy, I guess, Alan.
Yeah, yeah. See what it's going to end up at here.
All right. Hey, guys. So we're back down to 32. So it's up and then came back down. Yeah, Alan, I heard you say you're an hour away from where I live. You used to live a lot closer to where I am. I used to be like right down the street from you.
Yeah. Well, today's traffic, it probably took me 3 hours to get there. Construction, it's so bad. We don't even bother going on the Gardner anymore. Like it's just,
Yeah, it's a parking lot basically. Yeah.
it's all bad.
Yeah. Yeah, it's ridiculous. They need to like double the size of that highway.
Well, it's just there's no way to. When I first came to Toronto in '97, you could drive on the DVP and it would be empty on Sunday, right? The highways were empty, and now
Yeah.
they're full all day, every day. Just
Yeah.
unbelievable.
Well, that's what happens when the population of a city almost doubles in a decade, you know?
I know. It's unbelievable.
Yeah, it's crazy.
It's unbelievable.
I'm a believer of immigration. I think it's great to have more immigrants in the country, but like we need to have the infrastructure to support it. Because literally in the past 2 years, we've had almost 2 million people move to Canada, and almost all of them went to Toronto.
Wow.
I
I
so
know.
it's like, okay, well, if you're gonna do that, like we need more roads, we need more hospitals, like they gotta build stuff, right?
No, it's just a mess.
Yeah. Okay, so here's the result. We had
What
a really
happened here?
we had a really good period, shot up a lot, and then not so much. Okay, so what do you want to change about this? Is there anything you want to look into deeper? Here's all the trades that were placed. Do you want to go through each trade? How do you want to go through this?
What time is it making the last buy?
So let's say we look at the first day. It is placing a lot of trades to begin with. This is quite a few trades that's placing here. Wow, it is placing a lot of trades. And the last trade is at 346. So I think
Oh,
maybe
this
that,
is trading all day.
yeah, this is trading all day. So we probably should,
Stop it. Make it the program. Make the last buy at 11:30, and spend the last half hour to close out that trade.
okay. Stop time is 11:30. Quite short. And we'll get stop time. Stop time. And stop time is basically just not placing any new trades, right?
Right.
We go here, check if it is the time to stop trading. Third time is we're in stop time, time to stop trading. There you go. Okay. Cool. So let's rerun this with just the mornings now. It should be good to go. It should run a lot faster this time around too. So it downloaded all those contracts and it's a lot less time.
Did that chart look like it was doing calls and puts together, or are those just right after each other?
We could look into that in 1 second. Sorry, I just want to
Okay.
make sure this is off on the right foot. It's all good. It's all good. It's all good. Let me make sure it hits this. Time to stop trading. Current time 11:42. Perfect. Why did it go all the way to 42? 30. Oh, I guess because it owned something before. Okay, that's fine. All right, okay, so we'll run that. This should be pretty quick now. And sorry, your question was
Oh,
calls
they're
are
so close together. It looks almost like they have puts and calls at the same time, but that's not what we want, of course.
yeah,
Maybe
put, call,
oh, I
put,
see. Okay.
put,
Yeah.
call, put, call, put, call. Yeah.
So it's just switching back and forth really fast.
Yeah, exactly.
All right. Cool. Thanks.
Placing a lot of trades. This feels like something that'd be really good for Tradier. Commission-free trades would be amazing for something like this.
Yeah, that'd be hard to do manually.
Yeah, definitely very hard to do manually. But also like commissions for something like this would add up real quick.
Right.
And that Trader has that $10 a month and you get no trading commissions for
Oh,
options.
nice. That's better than IB.
That'd be amazing.
Yeah, yeah. Yeah, sorry, Alan. That's a US only broker, but
Yeah, I know. It's about $1.10. It's about $1 per trade on
yeah,
IB.
yeah. Well, with this many trades, that adds up real quick, right?
Yeah.
Like you're placing what, like 10 trades a day or something.
You can use my address to open an account.
Yeah. Yeah, the address is fine. I think the hard part is getting the US social.
Oh, right. Yeah.
I still have one from when I lived in the US, but I'm actually going to apply for my green card very shortly, probably the next like
Cool.
week or two. Yeah, I did a little bit of research on it before we went to LA, and it's apparently a lot cheaper than I thought. I thought it was going to cost me like 4 or 5 grand. Really, it's going to cost me like $1,200. We'll get AI to fill out a lot of the forms and stuff.
Big losing streak there.
Yeah.
Nice.
Yes, it is saying you lose. When you calculated this 100% a day, what time period did you do it over?
I did over 3 months. It was May, June, October, November, and then a January, February.
Okay, May, June, October, November. Okay. So here we're going from January to May.
That's fine.
Okay.
It's a different, the market's been, it's a little different.
Mm-hmm.
So the underlying strategy is you're capturing just the momentum of the next few bars.
That's right.
And then getting out. With an option, I could see how that could be profitable, theoretically. If you had, tight spreads on the option. If you're buying at the market with a 50-cent spread, then that won't work, in my humble opinion.
Look at that. It's gone down. We're losing. What's going on in that month?
Yeah, I wonder if it's going to see the same pattern because it was down a bit and then it shot up like crazy around this time
So
period.
so it's losing. Pretty volatile.
Yeah. Yeah, so we can analyze what's going on. Let me clear this up a little bit because it's too much. I have way too many tabs open. I got a faster computer, but now because of a faster computer, I have less of a reason to close tabs. So I have like an insane amount of tabs open. It's truly gotten out of hand now.
Kind of looks like it's moving. If you, the way I remember the market move, it looks like it's moving with the market. So if you look at it in March, the market did really well, and this did very well. Not this one, the other one. In March, did very well, so which makes sense. So calls would do well, and things like that. So it's kind of has moved with the market. So my has not just invest in the market, something aggressive in the market. It's not doing anything that beat
What's your EMA set at, Rob?
My EMA is set at 9.
Change that to 3.
3. Okay, much shorter. Okay.
Change your candle size. How long are your candles here?
2.
These are the 2. We should try the 1.
Change it to
before
1.
you
Change it to 1 minute.
Yeah.
Okay. All right. So I'll run both of these.
Well, don't change 2 things.
No, I'm gonna run 2 different back tests.
All right.
I did one EMA length 3 and candle size of 2, and then now I'm gonna run another one where it's a candle size of 1. So we could speed this up a little bit. Okay, so we got those two going. This is running a lot faster now. I'm glad I did those speed improvements when we bought. Actually, like
Yeah,
it's
so
really
with the 1 minute, it should be longer, like 5 to 9, something like that. Three samples is not a whole lot.
Yeah, do you think so? What do you think, Alan? This is your strategy.
Short is better.
Shorter is better?
Yeah.
So 3 EMA with a candle size of 1. That's barely an EMA.
What it's doing, it's getting rid of the noise in the signal.
Okay.
That's all it's doing. Because what happens, getting in and out of the options is all about eliminating the noise. So the Heikin-Ashi eliminates the noise. Now you can smooth a Heikin-Ashi candle again. There's 2 or 3 ways to do it.
Okay.
Let's
Well,
just see
how
what
does this
happens here.
compare to what you're getting? Because can we like go trade by trade? Would that be helpful?
Well, we'll take a look at it, see what's happening here.
Yeah, because it's still losing money.
What's it saying here? Still losing
Right.
money.
Lost less money. Start. Still not positive, but at least it's
Maybe we can short this, right?
yeah, yeah, exactly. Right. Just do
Yeah,
the
by the
opposite.
opposite.
Actually, if you short this, you make a lot of money. Look.
Yeah, exactly. Actually, yeah.
Oh wait, let me move that out of the way. So this is trading 5% of the portfolio.
Yes.
Change it to 1 contract. Buy and sell just 1 contract.
I mean, that's just going to change the magnitude of the loss. It's not going to really make much of a difference.
Oh, but it affects the recovery.
It affects the recovery.
Once you start going negative, you start trading smaller. It's the reverse of a martingale.
Yeah, I guess you're right. Okay. Fair enough. So let's do I'm just going to jettison all this stuff here. We're just going to go quantity.
Just say quantity equals 1.
Yeah. I'm going to put a little to do. To do, change this back. Okay. And then what are the rest of the parameters? We have EMA length of 3,
30.
candles of 2. Right?
Sure.
Okay. Either way, I think the general direction is still going to be the same. If it's a single, if it's just one quantity. It probably won't go down as much, or like there'll be some changes to it, but it's not going to change the direction of it, you know.
I hear what you're saying.
Yeah.
So I need to look at the trades.
Yeah. So why don't we go through that then?
Let's see.
Is there a time period that you know that we can go through?
It shouldn't really matter.
That's a nice
Because
return.
it's going, if the market's going bad, it's going to be buying puts.
Mhm. So we can compare this to the trades that you have. Like if you have a time period, tell me what time period. I
Hang on.
pass over that time period, and we can compare your trades to this trades.
Yeah, let me see what I can find here. Just a sec.
So this one, if you reverse, like call and put, would that work? I mean, if you instead of buying,
If you reverse
you buy put, yeah, and buy instead of buying put, the just
yeah,
reverse, then that could go the other way, right?
yeah.
I'm serious. I mean, we could try that.
Why not? Let's do it. We can do that. And then I'll get rid of that quantity 1 thing. Okay. This is the one that did the most negative, right? Negative 70, right? Like if we reverse this one, email length of 3, candle size of 1, the reverse hacking, yeah. Well, this is with one contract. So it's still the same direction, it's just, less.
Yeah.
So let's go put by the call. Let's run this. I guess actually this should change too. This should be put, should be call. Just got to remember to switch these back. I'm sorry, I'm just realizing you guys were writing here. 5-minute bar will be 9:35. Yeah, that's if we did 5 minutes. Why are there no option contract errors? What do you mean by that? Why are there no errors? Sorry, you asked it 20 minutes ago. Just realized that you said that. Nathan asked, heck, I'd sell for 50% per day. Yeah, so would I. 50% a day sounds very nice. Then Joseph says the reverse hacking. Yeah. Well, so far the reverse of it is working. It's actually up so far. It makes it more of like a mean reversion strategy.
Oh, yeah.
I guess no, because we only changed no, actually that's good because we changed everything across the board. This is actually making money. Alan, are you sure you got the direction right?
Let me just see.
Because this is looking good so far.
It's a better strategy. What is it?
Literally the exact opposite of what you put out. It's making money, man.
How did it end up? I can't see it. Where is it?
It's at 37,000 right now. So
There
it's
you
up.
go.
Way down in the bottom right corner of the page.
Oh, sorry, I had something covering up the window.
Oh, so NM, the reason why we get those errors, these errors that you're talking about here, the unable to find contract, is probably because it's like a weekend or something. That's expected. That's why we have this loop here. That's basically checking, where is this? Right here. We try to get the price. And if it can't get the price, we'll return an error and the price will be none. Right. So it's probably like a weekend or a holiday or something like that. So that's why. So I don't know, maybe we don't need to be showing this error here, but we could get rid of it. It's not really like much of an error. It's just like really more like a warning, to be quite honest with you. Yeah, no problem. Yeah, Alan, the reverse of your strategy is kicking ass, man. Is doing
There we
well.
go.
Literally the exact opposite.
Well, it's not completely clear that you two had the same implementation. So
What do you mean by that?
you could have, between the two of you, either one of you could have had your logic flipped.
That's possible.
Yeah.
I'm never going to get put to call straight.
Calls means goes up, puts means goes down.
You know how many times I've heard this?
Yeah. I think you'll get it.
Let's see.
Although I gotta admit, like options are definitely not the easiest thing in the world. They're definitely quite complicated. Took me a while to like wrap my head around them.
Okay, you're gonna have to send me this strategy so I can test this tomorrow.
Yeah. Well, I mean, you get it. It's gonna be in GitHub. I'm gonna put it up.
Oh, cool.
Yeah, so any guys, if you want to use it. It's actually pretty good. I mean, it's up quite a bit. Look at this.
Wow.
Yeah, I'd say that's pretty good. You know?
Yeah, no drawdown to speak of. That's cool.
Yeah.
Well, let's see the 1 year, and then we can pop the champagne or bust out the whiskey. I don't care for champagne.
I agree,
Actually,
actually.
I drink the Captain and Diet Dr. Pepper.
Nice.
Dr. Pepper.
I haven't had Dr. Pepper for a
It's
long time.
Doctor, after all that after getting dissed by MAGA, so now Dr. Pepper's the number two soft drink.
Oh yeah.
Yeah, if you want to get popular, just piss off the MAGA.
That's the opposite of Bud Light. Yeah.
They've recovered nicely as well. That again, like I say, it goes back to P.T. Barnum. All press is good.
Honestly, I should have done it. I was thinking about buying Bud Light when it was down. I'm like, this is ridiculous. Like, come on. Like, I mean, you pissed off a bunch of people. I get it, right? But people forget, like, this is not, you're not going to give up an entire, like, Anheuser-Busch. Do you know how many beer brands they have?
Well,
Like, it's basically
it
all
goes
of
long,
alcohol.
but it goes longer than that because the people who are pissed off are the minority. So the people who like them have longer memories. So it's pissing off the angry minority is not a problem. It's actually a winning strat.
Hmm. Maybe.
We'll find out in November.
Yeah, we'll find out. Yeah. Okay, so this thing's running. The reverse. Alan, do you want to go through maybe the trades and see what's going on here? Because
Yeah, let's take a
the
look.
opposite is working. So, do you have like a range of dates that we can do this
Yeah,
over?
let's look at June last year.
June last year. Okay, so we'll go the entire month of June.
Yeah.
Okay, 23. June 1st to July 1st. Okay, and then we'll go run this.
Let
And
me
then
find a day here.
we reverse this back to the normal, right? So
Yeah,
I
so let's
did the opposite. So we'll go puts for calls. So call, put, and then call, put. All right, and let's run that. Yeah, buying a call, buying put. This is check as a call, check as a put.
Well, the next time you edit those, please put in suitable names instead of editing those strings.
What do you mean?
You should be using variables if you're going to change them. It's debatable the first time, but you should definitely substitute it when you do it the second time.
So how would you change it? What would you do different?
I would have manifest constant called whatever you think this is, long call, whatever. So
Oh, I see. Okay, so we can
you
go.
just edited the same characters 3 times, right? So.
Yeah. I know what you mean. Okay. Yeah, I only did that because it was a temporary thing, right? Like that's that wasn't meant to be a
But the lesson of
yeah,
after you do this a while, you learn that all temporary things are permanent.
yeah.
There's no such thing as a one-off.
Yeah. Yeah, it's not a bad idea to make that a constant or make these constants. We have to change these to long, whatever. We can do that next. So we're back testing. So this is June. This is longer term with the reverse.
yes, so let's look at June 9th. The trades on June 9th, if it went in at 9, the time it went in at.
Yeah, we're almost there. We're
Yeah.
So, Jim, are you talking about putting a variable in for reverse strategy? Is that kind of the idea?
Yeah, well, especially all this logic here where, for example, there's multiple tests on the direction and then there's multiple places where you think you're coordinated. There should be a single point that controls those things rather than remembering that you're keeping things coordinated across distant parts of the code. Any coordinated logic should be within a few lines that you can see in one place.
yeah, so here it is. By the way, that's a good point, NM, that this should be a future strategy. I actually like that idea. I feel like this would work pretty well if like if it works with options, it should work well with futures because it's true. You do get weird fills with options sometimes. Okay, so here is, so you said June 9th?
Yeah. Let's see what that's here.
I think this is June 9th. Yeah, there you go. June 9th. All right, okay. First trade was at 9:50 a.m.
950.
Yeah, bought a put.
Okay. Hmm. And my logic's buying it at 946. What is the price? What is the price there?
I think we actually set it to not be earlier than 9:50.
All right. Okay. Is
There's
there, when's the next one? Is there one at 957?
There's 9:50, then there's 9:52, 9:55, 9:57.
What's the price at 957? What did buy it?
9:57, it bought a put
At one, like $1.31?
at $1.41.
What's
And
it how's it determining the buy price in Polygon?
well, that's just the price that like it was at the time. I think we get the open of the next bar is what determines.
Right.
So we fill out.
Okay.
So this is a 431 strike, by the way.
530.
Is there a 15-minute delay in the data?
Not in
No.
this. In paper trading there is, but not in backtesting.
Okay, I'm gonna have to compare these tomorrow. The market's closed tomorrow, so my trades are different.
Yeah, so I'm wondering what you're doing that's different. Can we break down why each trade was placed?
Yeah, yeah, I'll have to do that tomorrow. It's my wife is for to bed in a minute.
Oh yeah.
And hang on here. I know why.
Yeah.
Okay, so I want you to smooth out the data.
Oh,
And
so
I want you to do an EMA on the Heikin-Ashi.
an EMA on the Heikin-Ashi.
Yeah.
Okay, so right now we're doing EMA on the close. Calculate the EMA on the Heikin on the HA close on the Heikin-Ashi close.
On all of them. Yep.
But the close though.
No, because you want to smooth out the Heikin-Ashi bars.
So how does that work then? Because an EMA is usually on one number, right?
Yeah, so you'll do an EMA on the close, an EMA on the open, an EMA on the high, and an EMA on the low.
Oh, okay. So you have 4 different EMAs.
Yeah.
Okay. Okay, so calculate the EMA. I'll go
And we're looking for them all all moving in the same direction.
No, what we want to do is get rid of the false selling signals.
Well, I mean, how are these 4 values going to be combined?
Well, they'll determine if it's a red or green bar. It'll change the numbers.
HA EMA close. Open, high, and low. Okay, so now we have the EMAs for open, high, low, close. And what do we do with these?
So now you can determine the new, is that a red or a green bar? Really, I guess you only need the open and the close. Sorry.
Okay,
So for your sell signal and your entry signal, those are your new green bars and red bars.
so sell signal is the so these EMAs, right? So what am I using these for?
Okay, so when you do a green bar, you'd enter the trade. It'll be a green bar based on the smoothed out Heikin-Ashi candles.
Okay, so these EMAs. So basically, so we only really need open and close. We don't need high low.
That's right.
Okay.
Yeah, and so just introduce a variable that says gain, up bar, compare the open and the close.
What do you mean?
Compare the open to the close and say it's up or down, right? Direction.
Right. Yeah. So first I want to get the last. This is the second last. This is get the last HA candle. Get the open and close. I'll go get the last HA EMA or get the HA EMA open, HA EMA close. Those are last ones. And then, yeah, sure, we can make a variable for that.
Where does last HA candle come from?
It's just the last.
Oh, there it is. I see.
Not really named appropriately. It shouldn't really be HA candle. It should be the last thing in general because the EMA is even part of that. EMA close, EMA open. We can say determine if the HA EMA is positive or negative.
The EMA doesn't matter. We just need to know. We're just smoothing out the candles for a buy, sell, or sell
Yeah,
signal.
you're just subtracting the open from the close.
Yeah, exactly. Which gives it. It's not slope. I don't know why this thing is slope. It's not a good thing with. Basically, I'm just gonna do
Is
this.
the last candle? Is it if it's a green candle, the open is less than the close,
Yeah,
right?
so
That's what we want to.
before we had check the EMA is greater than the second, right? And then we had open and close. So now you're saying instead of
So the open and close, we want the smoothed out EMA candles, the smoothed out Heikin-Ashi candle.
okay. So this is not HA open, HA close. This is last HA EMA close or last HA EMA
Yeah, open.
open.
It's less than. That's right.
Yeah. And this one is okay. So now that's smoothed out. That's it. That's the only change we want to make.
Yeah, yeah.
Right, as opposed to the. So now it's going to be only slightly different. What are we still using this for? Check for sell. And then when we sell, do we also use that?
Yes.
EMAs, okay. Close. Okay, so now these are not being used at all. Just to be clear that those are not being used. Okay, and then we still check the regular EMA.
Yep.
And we still
For
check
the
that.
direction. Yep.
Okay, so let's see. So let's run this again. And I think this should run June. We have June here. We go June 23. Okay, so far it's making money. Sort of. Okay, so it is losing money still. But we could actually look at the trade still and see what's happening. What I could also do is I could introduce some variables so we could see each one of these, the values of each one. That could help us to analyze what's going on. Yeah, because this thing is down.
Going on.
Yeah. So let's say you said June 9th.
Why is it so off?
First trade at 950, next one at 952, then 957. So it's knocked out a few. I remember there being an extra one in here before.
So what's its in price there at 950?
The 950,
Yeah.
we got in at $1.51.
And what did it exit at?
It exited that very soon after, in a minute later. 1 minute later, it exited.
Does it generate a list of the trades? Or is it just only on the graph?
This is we don't have actually, yeah, we do. Yeah. Let me where's this? Logs, there it is.
Okay.
And this is available in the Pro and the All Access plans. It's not available in the Starter plans if you want to get the code for this. So here's the logs. And then trades.csv. Here it is. So June 9. There we are. It's not the color. So 950. Yeah, so here's all of them.
Yeah.
So buy, fill. Right, so it filled there. Right, and then the cell got filled there.
$4.31. Why is this so different?
We can go through a logic of each one.
Yeah. I'm gonna have to do that tomorrow.
So why don't we do this? So we can actually get a lot of the data together, right? So all this open, close, high, low, we could turn all these into graphs on a chart so you could actually see when all this stuff happens. So why don't we make that easier for you? So add lines to the chart for each of values. Right, so EMA, second to last EMA.
Why is the reverse of the strategy so much more profitable?
I don't know. But I mean, honestly, after saying this, I kind of want to do the reverse. It actually did very well. We're still back testing that. And it's actually up quite a bit. Like literally the reverse of your strategy. It seems like a very good idea.
I think we've got something flipped around somewhere.
Probably, yeah. It wouldn't surprise me if one of us was doing the
Or it's
opposite.
probably me.
It might be me too. I don't know. Like we can go over it. But it kind of makes sense. Like, I mean, generally speaking, what I've always heard is like the kind of the tried and true advice is very short-term trading, mean reversion tends to do better, and longer term is trend following, generally speaking.
Yeah.
And we're doing very short-term trading here. So it's not entirely surprising to me that that it's working the opposite way.
Have you ever tried this on maybe something like weekly candles, Alan?
No, I haven't tried that far. No. No, I'm gonna have to. I'll take a look at it tomorrow. My day starts pretty early with the kids. I go up at like 5 o'clock in the morning. So,
Oh,
Rob, you know exactly what I'm talking about soon.
my wife does. I don't wake up that early. That's way too early for me. Yeah, especially because, I tend to do these things pretty late and whatnot. And we have customers all around the world, so like I tend
Oh
to be
yeah.
up. Yeah, so my wife is the one that's up at like 6 o'clock in the morning with the kid. And then I get up like 10, 11. That's kind of my day.
What time do you wake up?
Like 10, 11.
Well, we're like that's half the day's gone. Like for me.
Yeah. Yeah, I've been told that. My wife has told me about this too. But like for me, like if we're doing these classes, like I'm up until
Oh,
like
I
10
totally understand it.
o'clock, like
I
I'd
used
be
to be a
tired.
night
If
grind
I woke up
person.
at 6 a.m. today and I had to go through this, I wouldn't be thinking straight at all right now. Yeah.
No, exactly.
Yeah.
Okay, well, I'll go through this tomorrow and I'll compare it with my data and see what's going on and why
Okay.
it's different.
Okay. So let me first print out this chart and then put this up onto GitHub so you guys all have access to it.
Oh, great. Thank you.
Yeah, no problem. Yeah, and I'll get these logs for you too, because I feel like this will be very useful, so you don't have to rerun it.
Well, I have a Polygon account, so
Yeah, but it's also like you got to set everything up. This just makes it a little bit easier, right? So here you have, let's say if you go to like your June 9th that we were talking
yeah.
about, this is June 9th, right? The indicators graph is really useful. Right. So here's June 9th. Right, this is put option bought, right? It has all those. We could take those off. And then here's all your EMAs. Right, and June 9th. Is your June 9th crosses. They're very close to each other. This is actually kind of hard to read. Do I scale? How do I scale this axis? I thought there was a way to scale this somehow. Yeah, I don't know how to scale this. These are so close to each other, it's very hard to read.
Yeah. Okay, look, I'll take a look at it tomorrow and
Okay.
market's closed, so we'll figure out what's going on.
Okay. So let me take this then and we'll put this up on the GitHub. So this is tear sheet indicators settings. This is the most recent run. I'll put this into a logs folder in here. Go logs. S. Then I'll copy these over into there. Come on. Seem to like this with multiple monitors, so let me move this up here. So those are our logs. And then I'm gonna clean up the README real quick.
So Alan, what part of the world are you from?
I'm in Toronto.
Oh, okay.
All the
One
Canadian.
thing I am doing different than you are is I only start pulling, I don't pull any historical data. So I start pulling data at 9:30. In my calculation, in my thing, I have a number of bars to download starting from the beginning of the day. I wonder if that would be making a difference.
It could.
Well, certainly should need to check it, make sure we're not looking at more bars than we're supposed to.
Yeah. Well, when you look at the indicators plot, right?
Yeah. And I'll see if it's making the same buying decisions. That's what's important.
Yeah.
Yeah, and I'll look into it. Like I say, I've been like I say, I just started working on doing some stuff with computing these directional signals like this. So very interesting. Very much appreciate you sharing your inspiration here, Alan.
Well, it would be better if it worked.
Well, we'll sort it out. I mean, we all believe there's something here. That's why we're here.
So,
Yep. Yeah,
One of them worked out pretty well.
the opposite worked out very well. So
yeah, it tells me there's something flipped around.
yeah, maybe you have your logic flipped, or maybe I have my logic flipped. It
Yeah.
seems right to me. I mean, from looking at it, but
Yeah, I'll check it out.
that also kind of makes sense that for it to do like a mean reversion type thing.
Yeah.
Like I wouldn't be surprised if the flip was actually the right way to go. Either way, let me throw this.
It's every possible way is possible to convince ourselves. This is why we do algos.
Yeah.
Yeah.
We will look at the data and we will find out.
Okay.
Yeah.
So I'll post a thing on Discord or whatever.
Okay.
And I'll talk to you tomorrow. How's that?
Okay, sounds good. And you could check GitHub. It'll be available to you when you go in there. All right.
Okay. Cool. Okay.
Okay.
Well, good night, everybody. Thank you for your time.
All right. Have a good one.
Yeah,
And the
that was
indulgence.
great. Thank
Good night.
you so much.
Okay.
All right. Have a good night.
Okay. Good night.
Okay, so I'm adding this in here. What is it called again? There it is. Options hike and EMA. Let me do this again. We'll create, and then publish this. I'll put this into LumiWell strategies. Right, and then we'll make this available to anyone on the Pro or All Access. So if you guys want to take a look at it. Teams, Pro, it's not a new window. Repositories.
Yeah, so I was digging around in minute bars, looking for these, trying to pick top gainers, and one of these cases I'm looking into, and I'm pretty convinced that the close reported for the day is wrong, and so I downloaded the tick data for the day, and which is a whole nother beast, it turns out. I don't know if you ever looked at the structure of the trades, but it's difficult to figure out how to even calculate bars from the trades. But I think I found the answer, which is actually, I'm pretty sure that the market center reported the wrong close for the day.
Oh, really?
Yeah.
And what is this for? This is for SPY?
This was BEST on March 18, 2022, when they were one of the big gainers, and their close was reported as $1, even though at no point during there was one trade in the middle of the after hours at that level, but none of their opens and closes of any part of the market was ever at that level.
So they probably took into account the after hours.
No, where this comes from, so there are something like 40 different conditions reported on each trade. They have all these different kinds of things that are listed as a tick, And one of the ticks is called the official market close. Um, and it was reported as $1, even though there was no such trade.
Wow, what the hell?
Yeah.
That's
Data's not perfect. Turns out there's dirt everywhere you look. Bugs abound.
yeah, surprise, surprise.
The other story, the other possibility is, I see, and this was reported as the close for the open market for the market hours.
Mhm.
And this trade bar with the dollar was showed up in the middle of the after hours. So the other possibility is this was, which doesn't really make any sense, that it was some dark exchange, and it's getting reported in the official because it was during the day. But the thing is why would anybody buy who's working with a dark exchange to buy at $1 when the price during never really got over 88 cents the whole day?
What was it, like a really big order?
Was that?
The question is, was it a big order? Because sometimes that happens, like when people buy large quantities of something, they'll buy above market price because they know they're going to move the price. So they just put in a bid at like a higher price on like a different exchange. Like that's happened. I've seen that happen before.
Yeah. Yeah. So it was, I mean, this is a thinly traded stock, and none the whole volume overall wasn't all that big. And so, but the thing is that if somebody had some unusual buying access, right, there are some kind of professionals, why in the world would they buy at 25% over the highest price of the, or 20% over the highest price of the day? That's not the move of a genius trader.
Well, sometimes that happens, like I said, if it's a high volume thing, right? Like if like especially if it's a thinly traded stock, like high volume could be still pretty small. But sometimes people will do that. Like we had this in crypto all the time. Like if someone came in, like a big whale wanted to buy Bitcoin from us, large quantities of it, we wouldn't do that on the regular exchange. We'd go and do that on the side, right? Because if they bought that in the regular market, they would move the price, right? So we negotiate that on the side because it's a big trade, right? So I'm wondering if that has something to do with it.
Well, that's what I was wondering, so, but if you're trying to get, but if you're, why would you, I mean, other than maybe they just made, I mean, somebody made a mistake. Either there's a bug in the data or somebody made a little bit larger than usual trade at a complete loss for what, and which is, would be weird that there was somebody who had special access for buying on a dark exchange, right?
Right.
Because presumably they would be wanting to buy at a good price.
Yeah. And it's not like a high volume. It's not like a large trade.
No, it's a small. Well, that particular trade was a little bit larger than the average size, but the point is it's the only trade that was over 88 cents the entire day. And then it got reported as the close for the normal market, but the trade candle itself is shown in the aftermarket. So weird. Somehow but that's the other thing is that the other part about the whole API and about all these things about conditions is there's all kinds of changes to the trades. There's a bunch of trades that get reported, oh, this happened, and then a little while they say, oh, wait, no, it didn't happen. Here's what actually happened. It's changing thousands of times a day. The prices after a trade is reported, sometime later it gets revised and say, oh no, correction.
Yeah, it makes sense. It's complicated, when
it is very complicated. But being able to work with stuff like ticks and quotes is what's that's what algorithms have. That's where the algorithms have an advantage over the humans.
Yeah, absolutely.
So what's next?
Cool. Yeah. So it's 10:52. If you guys want to work on something else, smallish, we could tackle it. If you guys want, we can keep working on this. I mean, the opposite of this seemed to work pretty well, which I think is pretty interesting. We can work on something else. What do you guys want to do?
Did you ever get the 1 year on this?
The 1 year I think was this. This is the 1 year, but I don't remember if this was the reverse 1 year or if this was the 1 year.
No, I think you ran the 1 year for reverse. I did you, or I don't know.
I don't remember.
Well, this
I
could
thought
definitely be
you-
the reverse because this wins in June
June, where's
20,
June?
or is this not going to? Oh, that came to
This
2020.
June. This is not it.
This is the wrong year. Yeah,
100%.
that's 1 month, and that's June in 2023.
Yeah. I swear I ran the 1 year.
December to April.
This is
I
not it.
thought Jim said, let's see the 1 year and you run it.
Oh, this is the 1 year. Oh shit, it was profitable.
There you go.
Oh, yeah.
There you go, the reverse.
It looks like Martin.
That's that's actually a really good strategy, not gonna lie.
That's good. Kind
Yeah,
of.
this is a
I
really
mean, the
good result.
beginning is not good, but the end is good.
Yeah, yeah. I'd take it.
Yeah, and if you and from November, it's a rocket ship,
Yeah.
and I
Okay.
think it's what he's talking about. So he was looking over several pieces of 2023 in there. So
23.
I mean, I'd be down to trade something like this.
This trades well when the market is good, it trades well, basically.
Yeah.
When the market is iffy, then it doesn't
Bear
trade.
market, it wasn't that bad. Like this is a bit of a bear market. It basically went sideways in a bear market.
yeah. Well, you see, and the thing is, it doesn't have a band in the middle, right? It's always decides we're heading up or we're heading down. In actuality, you're going to want to look for, if you don't have a directional bias, you need not to trade, right? Because otherwise, you should be putting on your iron condor, your neutral condor.
Well, this is not a directional trade either because this is directional throughout the day, right? So like this in particular is a mean reversion throughout the day.
Depending, whichever way the code's actually running, we'll find out.
We're going the opposite
I think
too.
this is-
So
I think it's
you don't know what you're doing really.
Yeah, well, I'll take it apart and I'll find. I'll come.
Yeah.
I'm not committing to anything right now. I'm just gonna see what it's doing.
So
Yeah.
57, 56% annual.
It's pretty damn
Well,
good.
I mean, that's not crazy. I mean, we're looking for 50% a day, like the man said. I mean, we don't have to have 100% a day, but 50% a day. That's what we're looking for.
Yeah.
It's not, that's
I
not
mean,
gonna
although seriously, that's actually what I'm actually trying to come up. I'm actually that's what I'm out there hunting for whales. I'm looking for that 10% a day. So
yeah, absolutely.
Yeah, and I think in this case 57% is probably a little over exaggerated because you'll probably have some slippage in your because we're trading options so frequently. Actually, maybe I guess it's very liquid options that we're trading, right? And in Tradier, there's no trading fees. So maybe we could actually get this. I mean, this is pretty interesting. So what do you guys want to do?
Yeah.
Sorry, just a general question. Do you guys want to keep working on this or do you want to work on something else?
My input would be, yeah, go ahead. Okay, my input would be.
Sorry, guys, I have a very loud background. Yeah, do you guys want to work on the alpha vantage? It should be pretty easy, like a 20 minutes task.
We could do that. Add the alpha vantage to the martingale. We could do that. What are you thinking, Ellie?
Yeah, I was thinking, yeah, just continue. I mean, we had a number of things we wanted to continue with martingale. I see a lot of promise in martingale. I think we can make that a lot smoother, and that would be something that would be. I mean, we want to make it in a way that a lot of people would be able to use it, right? So, I mean, in a way that would be less risky, maybe the reward would be less, but also would be more comfortable for a lot of people to maybe use for some kind of a retirement account or something, so they could count on it as an income source, things like that. So if we kind of have different, you have several different versions, come up with and you were talking about another version of it. I think we should work on a version that's much smoother and just try some of the things that we were thinking to implement. So maybe we can do some of that tonight, or maybe in the future sessions or whatever. But I think we should continue working on that. I know we've been doing this forever, and it's kind of, we want to do something new, but I think that has a lot of promise to
Yeah,
come
I,
up.
I agree. I mean, I want to
Yeah,
run
great.
all of them, you know?
Yeah, so
Like
that's
the ones that I found, I feel like were pretty cool. Okay, so we can do that. At least for me, I have like another half an hour of juice in me. So we can go about that. Maybe before we start on that, let's take a quick intermission, clear your heads, and we can switch over and do some Condor martingale.
Did we run a back test on this to like May of 2022 to present? See how it
May
did.
the existing, like the Hakanashi thing,
Yeah, the profitable one.
the profile and the reverse.
Yeah.
Okay.
Just to get the whole, all the 0 DTE lifespan.
Okay, so what I would have to do then is let me kind of like what Jim was saying. I'm going to put a variable in so that all this can reverse very easily. Let's call it like a variable of what do we call this? We'll
Reverse
call
strategy.
reverse.
Yes or no?
I mean, I'd call it like almost like
You can
but
call it mean reversion. That's what you were calling it. So
yeah, like mean reversion. I feel like mean reversion's like mean reversion false if true, we'll trade a mean reversion. So we set this to true.
although if I was going to Google for a meme, I'd go Google for opposite day.
Love it.
Okay, mean reversion. Right, and then if mean reversion this is opposite. So how do we pull this out? Let me think about if mean reversion, then we'll buy.
Well, so my suggestion there was to pull these pieces out that and give them names, right? So you got these comparisons and then you've got the type of transaction being done, right?
Yeah.
So those should be computed up above rather than in line.
Yeah. Then we'll have to say buying a call option bot. There's a bunch of like little things here.
But
Yeah,
things like call and put, they go into little variables and you can, in those strings, you can F string them in there.
yeah. I'm thinking about how to do that right now.
So there's two conditions, right?
Yeah.
And then there's the name for whatever you're going to call the put and the name for whatever you're going to call the call.
So then in that case, I wouldn't even call this mean reversion. I'd say what to buy when this thing, right? So um so right right on uh what do we call that, slope up, right on slope up is call, right on slope down is put, right? That's trend following. This would be a mean reversion. This is the opposite, right? So right on slope up, right on slope down, right? We go.
Yeah, but I mean, you really only want a single variable to control that, right? It wouldn't make, are you saying that it's going to make sense to have them uncoordinated?
Yeah, no, but
I was saying, yeah, you have variables like that in line, but in the config, it's just one direction or the other, right?
Yeah. Okay, we can do that. So we can go mean reversion true. We'll go say mean reversion, right? And then we go if mean reversion, then right on slope up is going to be what? Call, else do the opposite. Okay. Right on slope up. Like that, right, that we are sloping up, right? We say sloping up, buying a option, right? Okay. And then the amount, and then buy the slope up option, right? And then add a marker to chart. Um, say, okay, I think that works. Right? Slope up, da, 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 okay. And this just does opposites, I think. Log that we're sloping down. Portfolio value. Slope down option. Marker. There you go. Okay, so that's one part. And then there's also the part where we go check for sell. We'll have to go mean reversion is another variable in there. Find all these things. Right? And then we'll go if mean reversion copying it, but whatever. Check for sell. Yeah, right on slope up. So in this case, the default was not mean reversion. So this is slope up. Yeah, slope up, non-mean reversion. Log that we are selling the check if it is the slope up option. Log that we are selling the slope up option. Selling the create the order, sell. Then this also needs to be option sold. Okay. And then slope down. Selling the, actually, let's just take all of this and let it. It's funny when you like run a strategy and you get like the complete opposite working out. I've had that happen more than once.
Yeah, that's a good idea, Ali. I didn't think it was gonna work.
Yeah.
Well, the direction was very clearly, if you get anything going in one direction, that's, you know, that's all you need. So Robert, are you running Python 3.12 these days?
Yeah, I am.
All right, I guess I'll get brave and give it a whirl on this. So.
Yeah, it's actually pretty good. I haven't had any issues with it.
Well, there are a lot of obscure changes in there that, you know, don't necessarily buy you anything. So
I think the main thing is speed. It's a little faster.
cool. Yeah, so like I say, I just tried a thing called Modin, Modin, which is supposed to be a drop-in replacement for pandas that runs faster. Because for example, these tick files, the trades files, it takes 5 minutes just to run a handful of operations on them. But it barfed rough the very first thing I tried, so I put it back aside. But yeah, the tick data definitely puts a strain on pandas and Python.
Yeah, it's a lot of data. I feel like Pandas has really worked hard to improve their speed. I mean, I don't know how much better they are now than before, but I've heard that's kind of one of the main reasons why they're making all these changes is to improve performance. Like they've made a lot of stuff that I personally find very annoying, but I think if it speeds it up, then I'm personally happy. So there we go.
Yeah, the nagging in the 2.2 for the preparing for 2.3. Yeah.
Yeah.
But yeah, I make those changes. I want to see it go faster.
Yeah.
That's a winner, Robert.
Yeah, this looks good. I'll take it.
Damn right.
But it does go sideways from time to time quite a bit.
Why don't we extend this? We'll go with 2022. So this is like 2.5 years. Why don't we backtest that? We'll see how this works. The mean reversion version of this. And let me actually check this in. I'm going to clean this up a little bit too. I forgot to delete this before.
And this is on the so I canceled my or let my Polygon options sub revert to free because I was gonna use the interactive brokers data, but I guess I'll have to fire this up because we only get, so it's like advanced is 2 years of options and oh no, advanced is 4 years of options. Is that right?
Yeah, something like that. Yeah, I think it's 4 years. It's like the $100 a month one. And then the one that I get is $200 a month, and that's like 5+, which I think goes back like 10 years or something with SPY. It goes back a long time. Although
How
back
much?
then the market was very different because they had like weeklies instead of dailies, so there's a big, I don't even know how valuable that data is.
So how much do we need to pay if we want to get options data from interactive brokers?
From interactive brokers, it's a lot cheaper. Although I don't know if they have really long-term historical data, but I think it's like $10 a month or $15 a month.
Oh,
Well,
okay.
it's a whole smorgasbord. They have, it's because basically they're passing through the prices from the providers, the exchanges.
Yeah,
And
okay.
so, but I forget, and I started going down that road and then ran into problems just trying to set up interactive brokers. So that's when I bailed and said, you know what, I'm just going to use Tradier. But
Sure.
but yeah, I guess like I got to fire up this Polygon. Yeah, but yeah, Polygon developer gets you 4 years of historical data, so that's what you're covering here, right? So
Yeah.
So
Yeah.
that's $80 a month. So
yeah, and by the way, I fixed interactive brokers too. So interactive brokers is working now. I don't know if you noticed
Cool.
that. Yeah.
I haven't gotten back to it. The
Yeah, if you want to use it again, it's all functional now.
yeah.
Rob, do you
We
have
don't
a
have it set up, but we don't have it set up. Well, no, but that just begins. That's just the beginning because, like I say, we don't have back testing with interactive brokers as a data source. So that's why I say that's like I say I started working on that for Alpaca, because what I'd like to do is, we should be able to use any of our data sources for back testing. There shouldn't be separate implementations for back testing and live. I mean, if whichever we should be able to access. If a data source will provide historical data, then we should be able to use it in back testing. And it's possible to use a single implementation that does that.
Yeah.
So I made a version of the Alpaca that then had a flag about whether it's caching or not, and it just uses one API that works for back testing, works for time spans, works for bar counts, all that kind of stuff. But it's in limbo because it's just kind of halfway done.
Mm. Yeah, I agree with you on that. I think that makes a lot of sense. We actually configured the way at LumiBot works to have that. That's why there's now data sources and brokers. Like we actually made that pretty clear. So I think doing that shouldn't be that difficult. Now that we've made that like 6, 7 months ago, we did that, and like I think it should be easier now to go about, if you need to get historical data from interactive brokers or Alpaca, whatever. I think that should be possible without too much effort, I think, you know. So
Yeah, so I'm gonna uh, yeah, so the stuff I was doing with Alpaca because I was excited. I thought we were going to get this cheap mega source of options data, which turned out not to be the case. But so yeah, I'll be digging in. So anyhow, to answer James's question, or Achu's question, I'll be working on, or if you want to work on getting uh, options data from interactive brokers, it's far more complicated, but I think it's cheaper than Polygon by quite a bit.
see, I
yeah, I think
see.
so too. I still know how back the history goes. That's the
Yeah.
bigger question. So like how far back can they go in terms of history? Sorry guys, give me 1 second. I'm gonna use the bathroom. I'll be right back. You guys feel free to continue conversation.
So still like the Polygon IO is our best bet, right? It's a reliable, it has many years of data.
Well, I'm checking on interactive brokers options right now because I've forgotten what the deal is. There's actually a lot more data available from interactive brokers than is available through Polygon. Things that are especially interesting for algorithm trading are things like um, uh, going deeper into the order book, the quotes, than just the top level. So, for example, you can get L2 through their interactive brokers.
Okay.
Let's find out about options.
I remember they have a long list you can choose, right? You can decide to which to pay.
So, for example, NASDAQ options, depth of book, $12 a month. NASDAQ total views $1. Where's the CBOE? So SPY's CBOE, is that right? Or no, SPX. SPY is that on NYSE?
I think so, yeah.
So, but SPX would be on CBOE, I think. So CBOE, how do we find out?
Jim, do you run into like issues like you have to like re-log into Interact Broker?
I haven't been using the interactive brokers at all. Like I said, I went to try to go set it up and wasn't
Okay.
able to like get so, but apparently that's because that was the thing with the library was out of date and stuff.
Mhm.
And I have not, like I said, I've not gone back to it since. I just set up the Tradier,
Got
and
you.
Tradier is nice because if you have because I also you get a free account at Option Alpha if you put $2,000 if you have a Tradier account with $2,000 in it, and Option Alpha is really interesting to see what they're doing with finding all their different signals for finding options opportunities.
Jim, I'm up since February about $2,700,000 on those. But actually, when you try to, I mean, I put $200,000 on the paper trading. I'm up to 2,700,000. But when I actually put it in Tradier, there is so much slipper. None of those trade. I mean, it's just fantasy. All of their paper trading, you can try it and you'll find out. But once you actually go to Tradier and try to do that, none of those trades actually go through. They all fail. So on the paper trading, now I can show you my all of my paper trading on that. I've done amazing since February. Yeah, I'm up to $2.7 million in there.
Well, those are some large trades.
No, that. I mean, I started $10,000. Some of these, these trading ideas and stuff, the same way that they recommend with their classes and all that stuff they did. And I did some of my own things, including that stuff. I set up some algorithms and so on. And there is no coding, right? You just put together those algorithms. And I saw it work so amazingly, and there is no drawdown either. It just goes up, 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 up. And, and so I started actually putting real money in it. And it just doesn't make money, and I started losing it because.
But you're saying that's on Tradier?
Yeah, when you do on the paper trading, there is no slippage. The trades go through. There are quick trades that go through.
Well, that's another reason why Option Alpha is interesting because they don't use Tradier's paper trader. They have their own, and you can see the execution. So they actually are matching the executions against the market. You can see because in fact, you can wind up, you choose what kind of fill strategy, and they sometimes go through or they take different times, you get different prices. So the fidelity of the back tester, the paper, I mean, or the paper trader on Alpha options is really good.
Well, this is my experiment. So I would be rich if that would have worked. But
well, try your hand at. I'd be interested to hear. Give Alpha option a whirl, and be interested. I mean, Option Alpha, and whichever. I'm confused. Whichever order it is.
Optional.
But yeah, if you got to trade the accounts for, like I say, if you link your Tradier account to them, it's free, and be interesting to know compare their paper trading because, like I say, the little bits that I've done, they clearly are using working against live data to decide on the fulfillment for the paper trades.
Give it a shot. I've tried. I mean, they're in terms of paper trading, their strategies work and stuff. But once you do it actually in Tradier account with real money, it doesn't work that. Actually, if you go through all the other people that do live trading on there, they do see the same thing. Nobody actually with real money show you anything that actually works. Everything that they show you is on their paper money. But with the real money on that thing, nobody can actually show you any algorithm that works on that platform. But go ahead and just do your own exploring, and if you find out something that works, let me know too. I would like to try that too because I've been on that thing since February. So that'd be interesting to find out if there's something that works there too. because you have a lot of experience. You might find something that I haven't been able to. So.
Well, I'm not, options is not my bag unless I can have it completely automated, so.
Well, it's very easy to use for automation. There's no coding, so it's very smooth.
Okay, so we got this thing running now, the Hakanashi. Where is that? There it is. So far, it seems to be making some money, the mean reversion thing of it. So we could let that run. Now it's 11:30, almost 11:24. I don't think we have time to do too much stuff, but what would you guys want to do that's like fairly simple over the next, like, let's say 15, 20 minutes?
Remember to push these changes.
Yeah, I pushed it up.
Oh, okay.
That mean reversion false. And I did that specifically because I know Alan's going to look through it. That's the original thing, was it false? But the true.
I'm going to check it out.
Yeah. Yeah. So just remember to swap this mean reversion true or false. True is the one that seems to be working well, making money.
Yeah. Although, yeah, okay, but you checked it in as false. Okay, yeah.
Yeah, I checked in as false. Yeah. Yeah, I did that because I know Alan's going to pull it down. I don't want to confuse him.
Yeah.
Okay, so here's our martingale thing. I ran these back tests. They did quite well. This is from 2022. I don't think I ran these longer term yet. We can start with that. Martingale 4, longer term. This is Hakanashi. This is, I don't know what this is. Just running something else. Condor Martingale. Oh, is this running? This is 2022. Oh yeah, it's still 2022 down here. Okay. So you do a longer time period. That's something that we definitely need to know because this is shorter time period. This is longer time period. What else would you guys like to see with these martingale things?
Rob, I was just thinking about like for the sentiment analysis, the martingale algorithm, how much reliance do we have on the sentiment analysis?
We're not using it at all.
I see, I see.
Yeah.
Okay,
With 4 and 5, we don't use it because the reason why was because it added a little bit of value. It helped a little bit, but the cost involved made it not worthwhile
Understood.
because we had to use like a bigger machine because it's like machine learning. You know?
Yeah, I see. Yeah, that's because we're using the Finbird, right?
Yeah, so if we're using option or Alpha Vantage, well, everything has alpha in it. Alpha Vantage.
Oh, Alpha Vantage, yeah.
That one's free, right?
That one can be pretty quick, I think.
Yeah.
I send you a demo script just in case. I mean, in the future, you want to design some algorithm with a sentiment. I think maybe give a shot on that one.
Yeah. I pull it up. I feel like that's something that's going to take a little while to do. I'm getting a little tired here.
Yeah, if you just download that script.
Yeah.
The one that's below. Yeah, not
the second one.
Yeah. Either one, the code is the same. Just this one has more explanations of those parameters.
Okay.
Yeah, there's truly just one or two parameters that's worth to be tuned. Yeah, you don't need to import that Finbird. Yeah. as you can see, this is a development stage. But if you just Python and run that,
I guess we don't need this, the Finbert utils.
you don't need that, right? And then this thing can just directly run on any tickers that you have, and it's going to create two CSV files. I think it's already done that.
Found fetching data from Alpha Vantage API, found 50 articles from that.
And in your local directory or a directory that may be called data, it should have created two CSV files, I believe.
See here. Start. I don't see anything called data.
Yeah, maybe run it somewhere like where there's like a shorter directory, less like subdirs.
But let's go here, relevant CSV path, right? Like I think if we just debug
that. So what it does is it will fetch like all the data in one CSV file. It's gonna look into this CSV file and see which, you see it says found 50 articles, right? It's gonna scan through these 50 articles and check which one is highly relevant to the ticker. In this file, I made it to be NVIDIA.
There it
so
is.
Yeah, here we go. Yeah, sentiment data. So this one has all the data, 50 articles it found. Right. So this is a raw file. So the one next to it, NVIDIA relevant news.csv, is the filtered one. So if you check on that one, it has much fewer items, and you can see the sentiment score on that. Yeah, just the short one. Yeah, these are the ones that are highly relevant to NVIDIA. And each one of them has like a score. Yeah. If you scroll to the right. Yeah.
Okay, I see that.
Yeah, as a score, and it has a bullish, somewhere bullish. It's called some bullish or something like. It has this like a verbal like a gradings, right? It has a score of that.
Bullish. Looks like it's somewhat bullish.
Somewhat bullish. Yeah. Right.
Okay.
Right. So I guess you can do sentiment based on this. I noticed like in the Alpha Vantage world, the score higher than 0.5 is a high score, versus like in the Finbert we design, you want to only look at the ones with a higher than 0.9, right? But Alpha Vantage, like if you get like 0.4 or something, I think that's really, really positive. So that's the only thing.
Yeah, that makes sense. All right, so we would need to make this extract sentiment. Do these functions actually work? So if I just plug these right in?
Oh yeah, these functions are working. Yeah. It's just there is a big portion of it that I commented out. So this script can be working for a single ticker, but my original design for my own purpose was like iterate through a whole bunch of tickers and check the which ones are positive, which ones are negative. So it's just if you want to use it for many tickers, you can uncomment what I have like down below. Yeah, you see a whole bunch of
yeah. The way that this would work though is this main function here, or the convo martingale, instead of importing Finbert, right, we would go from whatever your file name is, right? Import sentiment, and we would just use estimate sentiment, that one function, which you don't have actually. You don't have an estimate sentiment function.
I have
extract.
Yeah, I think that needs to be like I think worked on. So far, I'm only like saving CSV files. I'm not directly exporting those scores, right?
Okay. Yeah, I mean, it seems like you're pretty close to what we would need to have here, right? Because it's just instead of importing from Finbert utils, we import from this file.
Sure.
And it's just use the same function, right? Like, I mean, that's the way that I would think it should work, right?
Yeah. Mm-hmm.
It's literally the exact same function call, just it does different things.
Mm-hmm.
Okay. Yeah, I don't know, man. I gotta say my brain's not working
Yeah,
fully
maybe down the road. Yeah.
this right now.
Yeah.
But I mean, if you were to do that, if you were to set it up to just load that different function, I mean, it'd be really easy to plug in, right? Right now, I think you'd have to
Mhm.
change a bunch of stuff because it's like getting files and
Sure thing.
other stuff. But I feel like we're close. I mean, if you got this printed to a file, but this is for a specific date, right?
Mhm.
So
A data range. Yeah.
yeah, you'd have to have different dates and stuff. And I know Alpha Vantage has rate limiting too, so I wonder how
Mm-hmm.
relevant that's going to be. You might have to like save a lot of these. It's saving to a different folder. I'll have to
Yeah.
like of them.
Mhm.
But
Yeah.
yeah,
What I was thinking earlier was, if we run this on the Replit for only the SPY, if we only run it once per day, right? So the rate limit is not going to be issue, right? That's how I thought about it earlier. We can
yeah,
keep it free, right?
yeah, I agree with that. The rate limit is more of an issue when you're back testing.
Yeah, yeah. If we're back testing it, yeah, right. If we're back testing a lot of them, definitely.
Yeah, I've worked with Alpha Vantage a bunch, and like they're great. They have a lot of. I think they're probably the best free news source out there, or free
Mhm.
data source for trading in general. I think out there,
Mhm.
Yahoo Finance is really good, and Alpha Vantage is really good.
Mhm.
But they do have rate limiting, and you know it's pretty severe. I had to write a lot of code to go around that.
Well, it's $50 for 75 calls per minute. $50 a month.
Yeah, which is still not even that many, 75 calls a minute.
Mm.
But yeah,
It's well, if you're caching, or you can go 300 for 100. I mean, it's pretty. It's not quite linear. It does get cheaper if you buy more, but
right.
75 is enough to avoid dealing with rate limiting problems, and you just cache your calls, and you run it overnight. You got all the data you need.
Mhm.
I mean, it's the
Yeah.
same kind of thing like the Polygon. Right? Once you run it, you cache the data. You don't need it. Doesn't actually need to make the calls anymore. So.
Mhm.
Here's Martingale 4, longer term from 2020. I'd actually be very happy with investing into something like this. Like this is like very stable.
Yeah.
35%
Well,
is
except for the part where it basically gets wiped out, very nearly gets wiped out and bounces back.
well, that's
Just
not even
one
that
thing.
bad. This is a 26% drawdown. So it's not like it's it's not only 26, it looks worse on the graph.
It's not. That's not 26%.
Looks like more. Yeah, I agree with you.
Set up for 50
Looks
and
like it
then
touched
split
zero.
one.
I
Sorry,
have
go
a feeling. I have a feeling, Rob. If we do the exact thing that we have on the list, there is a possibility to come up with a more optimum way to get a better return. I mean, this is pretty good, but the return is like, okay, 35%, but if we do that thing, we may be able to optimize it to get returns of higher than maybe 60, 70, maybe even close to 100. And get a lot. We won't get any of these glitches if we do that, probably. I mean, the only way to tell for sure is to just try it. But
yeah.
I can, I'm positive there's a way to do this algorithm to do a lot smoother than this and with better return. With
Yeah,
better
I agree with that. I agree with that.
return.
The reason why I
It's
say this,
not
'cause
nice,
most
but
people
the
are
returns we can get better returns too.
yeah.
That's what I'm saying. But I mean, if everybody agrees and we have time, I mean, today is late and you're tired and you already did so much. But maybe future meetings, future sessions, we can try the other things that we were planning to do and see where it takes
Yeah,
us.
yeah. I agree with that.
Speaking of futures, so what's the story with so Polygon? I don't find any mention of futures data. Is it there and I don't understand it, or how do we get futures data?
I don't think Polygon has it. Where to get futures data? That's a good question. I remember looking for this back in the day, and I found it difficult to find. So I don't know if someone has a data source, but I remember when I was looking for it, I couldn't find anything meaningful.
So
Polygon does it.
um so where do we do so what brokers do we work with that will do futures trading?
Interactive brokers can do futures trading,
Yeah.
and Tradier apparently, although I saw that you guys were talking in the chat that apparently it's not available through algo trading yet. I don't know. Tradier should have it either now or soon, but right now, interactive brokers.
Okay.
Schwab has it.
Yeah.
Yeah.
So yeah. So interactive brokers, getting data working with them looks like the thing because, like I said, I can't tell. So do you know what the so I've been trying to. They've got this enormous number of sources in their data marketplace, but I can't tell how much historical data you get with these from them. Does anybody know how to figure this out?
I mean, you can message them. You know, I think that's one way.
I don't talk. I don't. Well, apart from y'all, if I can't figure it out from the website, I'm not using it. I do not talk to salespeople.
You have a hard time with interactive brokers, so let me tell you that much. They actually, I guess their new documentation is a lot better, but I wouldn't call their documentation fantastic.
Yeah, interactive.
So with interactive brokers, futures is included in the U.S. securities. So I have options. Yeah. So I say so futures data is there. So which makes it weird. Why is it so hard with the other people? It's like it's part of the default bundle with interactive brokers.
Yeah, I know. I actually I spoke to another broker about this once. It was trade station or something or trading something.
Yeah.
They want to charge me $500 a month for data. And I said, what the hell is wrong with you guys? And they basically said, well, that's just the way that it is, and we can't get around that, blah, blah, blah. You go to interactive brokers and you do it for $10. So
Yeah, it's like it's in their default bundle. You get U.S. securities, including futures. It's not and if you're a pro, and that's that's in the free plan with your pro your pro account.
yeah, yeah, exactly. Yeah, I think interactive brokers is a good bet. I just don't know how far back the history goes.
Yeah, I've not been able. I can't find any. I haven't been able to find any documentation on the but and their thing is so wildly complicated, right? Because like your calls go through different servers based on whether it's live data, historical data, all this stuff. It's crazy stuff, man.
Yeah, they're a very complicated broker.
Do they have intraday or it's just closing data for interactive?
No, the interactive broker is the place for high volume, low latency, high frequency trading. That's why I got the interactive broker. So they, like I say, they have L2 book on right from the exchanges, right? So they have, this is way beyond what you can get from Polygon.
Oh wow!
The
But
best
it's really hard to use.
The best data that I've seen is these guys, Data Bento, but these guys are way more expensive.
Data Bento is cool, and I was also they have a trading library called Nautilus Trader, but it only works with interactive brokers. So the Data Bento, their whole thing is having this very low latency direct from the exchange's data. I mean, from the market center data. So, and you get the deep book. It's not just the top of the order book. But the Nautilus Trader only works with so for U.S. equities, it's only interactive brokers and Data Bento. So, but the thing is that I've never been able. Whenever I tried to calculate how much it would cost for the data that I want, it seemed pretty expensive data bento. So until I'm in the position to actually need high frequency, low latency trading, it just doesn't really seem worth it. Right now, it's, I'm downloading all the flat files from Polygon.
Yeah, these guys are really meant for institutional traders. Like
But the
actually,
pricing is very reasonable. And it's interesting, they don't even do a personal, non-pro thing, but their base pricing is pretty decent, and you get it covers 5 seats, right? So if you had a legal entity, like say I've speculate about the AI traders co-op, right? Where you could share the costs on this kind of thing, because yeah, the basic data bento plan covers 5 seats.
yeah, I actually spoke to a CEO a couple of weeks back, and she was trying to convince me to buy stuff through Data Bento. And I was like, okay, that's all great, but it's like $2,000 a month or something ridiculous like that. Um, but if we have a big enough group, then we could actually give it like if the economics make sense, then we could actually do that. That we can get it through Data Bento, and then you guys could get their data as part of our plan. But the economics need to make sense. Like we need to have enough people to be able to do that. So
Well,
we
work out the numbers. I'm certainly a candidate. Their data looks exceptionally good, and as you can see, right on the front page, futures. And like I say, you get their depth of book choices are they call it PDP 1 and PDP 10. So the access, so you have the access to the actual order book that the market makers are using to fill orders. And I certainly hope to use that data someday in the future.
Yeah, they definitely have really good data. That's honestly, they're the best that I've found. I haven't found
But
any.
they don't have news, right? So I think on balance, since Polygon does have news, and the Polygon's news is actually, I think, better than Alpaca, although it's pretty similar. I was definitely interested in, like if you could get us a package deal on, a all-encompassing, all-you-can-eat advanced coverage for all 4 products at some nicely heavily discounted price, I would also be on for that.
Okay. Yeah, we
But
have to get the
it's
number.
a little pricey to it's like almost $600 a month, right? So it's
Yeah.
would would like to be able to get, but again, and then again, like I say, we're here. It's like, yeah, so it's they got news, but they don't have futures. So,
Right.
I talked to Tingo. Tingo has pretty good news. And they don't have a personal plan for their historical news. They get $30 a month, get you 3 months news. But I did ask them about, what is their business plan for historical news? So you get their 15 years historical news. Um, uh, it's $500 a month on a year contract. And again, I think it's like 5 seats or something like that.
Yeah.
And
Yeah. I think without that, you can go back like 3 months or something with that.
yeah,
Like,
their $30 a month is for 3 months.
yeah.
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 Oh no, the 30 month, no. So I paid the 30. That's for the historical fundamentals. That's what I paid for. Yeah, the news. Yeah, 3 months news is included in their basic thing. The Toya.
This is from IBKR's website. Their unavailable historical data.
And yeah, so what's the
6 months. Whose size is 30 seconds or less, older than 6 months. But we'd probably be getting minute data anyways.
I mean, it's pretty. Yeah, so 1 minute bars,
But then
futures.
expired options, it says is unavailable.
Oh, that's a game changer right there.
Yeah, I mean that's the same problem we have. Yeah, I mean, end of day. Well, but there's EOD for options, right? Or does that saying EOD for non-expired options?
So
So I
about
wonder if
10,
there's a way to compute the expected prices for things like options and futures from the underlying values. Is there some formula like from Black-Scholes or whatever that we can figure
Yeah,
out what the
Black-Scholes
prices
is gonna
should
be
have
the
been?
closest thing, but it's not going to be accurate enough. Like you're gonna have issues with that. Black-Scholes is like theoretical what the
Yeah,
price.
yeah, I understand, but I'm saying the question is how close is it?
It's not that close. Like especially in times of distress, it goes way off. In normal times, sure, you could say it's pretty close, but like the times when it actually does matter, I wouldn't rely on that. Like that's going to be way too far off.
So where do we get data on expired options?
Well, Polygon has it. Yeah, that's what we've been using.
So
I guess that's why it's so expensive. No one else has it for any
Yeah.
better price.
well, but where are they getting it from? So I guess that's the
You get it
question.
from Oprah, and Oprah is like expensive
Right.
stuff, thousands
Yeah.
of dollars.
Yeah.
License to resell it.
what was the other data provider that you tried to implement
Theta Data is
proper?
another good one. Actually, if you want to do Theta Data, I almost finished integrating with them. These guys are really good. They actually have better data than Polygon, I think, for options. Their CEO is a really nice guy too. It's like,
Well, that's right. They're basically a Polygon clone yeah, they trimmed the prices like 15%. Otherwise, they including copied their website.
well, they actually have better data than them, right? Because they
Yeah.
have bid ask prices as well, and they have tick data,
Well,
which
Polygon has tick data. That's what I'm looking at right now. So
yeah, tick level data for the $80 a month.
Is it like real-time data or is it delayed data? 15 minutes delayed data.
Well, this is historical data, right? So it's not going to be delayed, right? Like we're not talking about live data here at all. We're talking about historical
Okay,
market.
okay.
well, that includes real-time access. So it's
Oh, it does actually. It has real-time access as well. Yeah.
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 I mean, that's like I say, it's just like Polygon.
It
Yeah,
has
the
some
So
interface
advantages.
is the
they
same.
trim the price. I say it's a direct copy of Polygon. So if the quality's better, which they would need to be because people aren't going to switch just because of the price, but like each of the numbers, the prices are all trimmed down a little bit, and the historical year things are all bumped up a little bit.
Yeah.
So
Yeah.
yeah.
Yeah. And they have tick level data and they have bid ask prices as opposed to just open, high, low, closed. So there's a lot of advantages.
So Polygon has all that too. That's so with the pro plan you get quotes, and with advanced you get trades.
Oh, no shit. I didn't even know I got that. I guess I
Yeah, and
have.
so it's on the flat files now too. So
Interesting.
the yeah.
I didn't know I even had that.
Yeah, I see. But like I say, it will definitely, it's figuring out, crunching the trades, is challenging. I don't even know what to do with it. And there's not a lot of code out there that's showing you how to correctly process it. I'm just kind of poking in the dark right now.
Yeah. And I mentioned ORATs. I actually work with these guys in the past too. These guys are another provider for options data. They've really improved their website. Wow, these guys must be making some good money. Where's it pricing? Or the API, the docs. Yeah, these guys are another options data provider. Although I don't know where they're why don't they have pricing? Yeah, I don't know. But last time I used these guys, Orats, they didn't have like a monthly fee thing. They had like you pay money up front and you just get it for a certain snapshot, which I found pretty annoying back in the day. I don't know if they've changed that since. It looks like they have some sort of tool now. Yeah. But I don't know, if you want to use theta data, if you go into LumiBot, I actually have a pull request open that I never finished. If you wanted to finish that up, this pull request right here for theta data, we could just add them in. They're almost done.
Great.
Yeah. So if any of you guys are interested, you finish this up, and we could actually use theta data as another source, which is cheaper, has higher fidelity data, goes back longer, right? So there
Yeah.
are advantages. Some the only problem with this with theta data when I was using them back in the day was that they did not have historical prices for SPY going back. They had it for the options, but they didn't have it for the underlying, which to me was pretty annoying because that means that we'd have to get a SPY from one source, then these guys from other,
Yeah.
but that's not that big of a deal. I mean, we could load it as a CSV file or whatever, it's like it's not that big of a deal.
Mm.
So if you guys want to finish data, I mean, this is cheaper, better data, and I almost completely finished it. Like
Great.
if you looked at this, we could probably finish this in like a couple hours.
The rest of them are pretty similar to Polygon, right?
Yeah, Polygon, I think, is the market leader for
Mhm.
retail investors. So everyone kind of copies them, right?
Yeah, makes sense.
Yeah. I don't know if I told you guys, by the way, they're Polygon's probably going to sponsor our event in New York. If you guys want to attend.
Wow.
Yeah, they want to give
When
us
was the
for an event. We'll see if that goes through. Hopefully it goes through. But $3,000 to go towards an event. We could have a pretty nice event in New York City.
Yeah, well, like I say, talk them into a putting together a package deal for all you can eat advanced package.
Yeah. Yeah. Well, I don't know if I meet them in person, we could have that conversation too. I think they might fly out. That'd be kind of cool if they came.
Yeah.
Which month was that, Robert?
End of August is when we're planning to do this. You want to come?
Considering it, yeah.
Cool. Yeah, end of August. If you want to do that, I think it would be the weekend of the 30th of August that we would do it. Even if they don't sponsor us, I think we'll still do this. It's just better if we get sponsors because then we can have a nicer event. But yeah, it'd be like let's say the 30th, I think, of August. Because Stacy said he wanted to fly out too, and he was saying Friday night is best for him. We haven't booked a date yet, but what would be work best for you? Friday night, Saturday? I'm assuming weekdays a little more difficult.
Yeah, no, I was saying I can
Weekends are
actually
good.
fly out. I can fly out on Thursday, but I was saying if we can have it the weekend, like maybe starting on a Friday.
Yeah.
Yeah, that'll work with me.
Yeah, that's cool. Yeah, we could do like a Friday night event, and then maybe we can do like a lunch the next day or something. We do something like
Yeah.
that. Yeah.
Oh yeah, that's the other thing with Theta Data though, right? You have to run their little server.
Yeah, it's a little annoying. Not terrible though.
No, at least it's just a jar. So
Yeah, exactly. Like you can just have Python run that.
yeah.
And he explained it to me that actually makes a lot of sense to do that. The reason why they keep that is because it compresses the data and allows it to go much faster. So
But they if they it would also be nice if they would offer that as a library, so you don't have to run it as a service.
yeah, for sure. I agree. Shouldn't be that hard to do though, even if you want to make
They
it.
they have a free thing. So do you know if they have Spy or not now?
I don't know. Last time I spoke to them, they didn't have it, but that was a while ago.
Yeah.
Even if they don't have it, we could load it as a CSV file. So that's not a big deal. Like spy data is not that hard to come by. We have it from Polygon. We like you can get that. It's already like I have a feather file on my computer already that has that. So like you just literally copy that.
Well, but like I say, I'm trying to unify. I don't want to have different setups for backtesting and live trading. My goal is to have a unified approach that runs live and runs backtesting. And, sure if there's multiple accounts, but it's not a money savings to run Theta data and still need a Polygon account.
Yeah, I hear what you're saying. I don't know. Check how they're doing it. I mean, I haven't spoken to the guy for a couple months now.
Yeah, they don't give a way for you to check through their website. You can check for free, but you have to go through the whole thing and setting their whole thing up to even find out what tickers are supported.
Oh, I see. Okay. All right. Oh, this is that that is a lot of trades. Holy crap. Still positive.
Treasury, it's treasuries, yeah.
Yeah.
Sometimes it does.
I mean, it kind of follows the actual market itself. Pretty close to. It's not exactly correlated, but seems like a pretty high correlation.
Yeah, but if you're underperforming the market is not what we did all this trading.
Well, it's not underperforming the market. It is beating the market, but just not by that
Is
much.
it?
Yeah.
Oh, I see. Yeah, just barely. Well, but not after trading costs and taxes.
Yeah. Yeah, you'd have to do this in a tax-free account if you wanted any hope of beating this, you know.
Is there a commission assigned on here?
There is a commission of 0.1%.
Okay.
Yeah. Trade your commission 0, but 0.1%, I think, slippage, maybe that is enough to account for that. They're pretty liquid options. We're trading here SPY at the money, so it should be pretty liquid, but you're still going to have some sort of spreads or slippage that you're paying.
And is this the mean reversion or the
mean
forward
reversion.
reversion?
Is a mean reversion. Mean reversion, true, right there.
And it's beating the market is just completely coincidence because of the day that you started this. It's just entirely coincidence. It could.
Yeah, it's not beating it by a large enough margin to beat.
Because if you started in some other day, it could be different. So it's not.
Yeah.
Because generally, if you look at SPY, it does a lot better than 6.6%, right? Over long period.
Yeah, I mean, we could back test this over a bull market. Maybe it does better over a bull market. This is over a bear market, right? 22.
This could do better too, yeah.
Yeah. Well, we'll see what Alan comes up with, right? Because he's going to take a look at it. Apparently, he can do 100% a day, right? So
yeah, I got to find out what was where did the recipe? Where did we lose the recipe there?
Yeah, exactly. Yeah.
No. I mean, when I heard that, I was gonna, I said anybody wants to bet, but I thought would be kind of like cynical.
No, we gotta. Well, this is what we're here to is go through and
just try.
Check it out.
Yep.
Yeah, like I say, my big crazy dream is 10% a day. So
no, I would be more
for 10%
than
a
happy
day.
10% a month would be more than my dream.
I'm not getting out of bed for 10% a month though. No way. No.
No.
I've been working on this for 6 months for 10% a month.
Dreamer, man.
Even 10% a month, like you do 10% a month for like 4 years, you'll never have to work again a day in your life.
I mean,
I've made that much money, and I can still no.
20 years you'll be richer than Bezos with 10% a month.
A lot. Yeah, definitely.
Polygon. So yeah, Polygon provides data. Yeah. And it's easy to use. They're but they're not perfect. And there's some things we want they don't have. But neither do we find any other single source that checks off all the boxes.
Yeah, I think Polygon's the best data source so far,
And overall, it's especially once I didn't realize they had news for quite a while. I did look at their news, and it's at least as good, or I think it's actually probably better. They have multiple sources, whereas I haven't looked at the Alpaca stuff the last 4 or 5 months. But Alpaca used to just be the Benzinga Pro, and the Polygon News includes the Benzinga and a bunch of others too. So it looks pretty good. And it's included in the price. So it's definitely on in terms of bang for your buck, it's Polygon's really good.
Yeah, I think it's the best personally.
Well, but when you get into high speed stuff, right? Then that's when we're back to talk about Data Bento.
Yeah. Then Data Bento is the best, I think, but then the price is also way higher.
Yeah, you're gonna need to be having a working strategy to pay for that pay for that much, because they're usage based. There's no flat stuff. It's you pay per gigabyte.
Right. All right, guys. I think I'm about to call it.
All right.
Definitely time to go. This is interesting.
Thank you so much.
Yeah, no problem. I'm gonna run these ones probably sometime tomorrow. I'm gonna be going to the city tomorrow, so I have a bit of a busy day, but I'm gonna try to actually get these up and running in paper trading tomorrow. The Martingale 4 and Martingale 5. So if you guys want to keep an eye out for that, hopefully we'll have that up and running later on this week. All right.
All right, cool.
All right. Okay. Have a good night, guys.
Thank you so